Velvet in the flesh, baby.
Watch your pocket.
I don't step into the market, baby. I slide in sideways like a silk-lined blade in a velvet parade. While you nervously refreshing, sweating candles, I'm already 5 position paid. I read that order flow like scripture. Break resistance like a bad addiction. Turn your fear into commission. Turn your doubt into ignition. See, I don't chase trends, I bend them. Don't pray for runs, I send them. When I load that bid, the tape go quiet like the whole damn floor just ended. You play checkers with your rent money. I build empires all percentages. Compound interest so scandalous. It should come with damn witnesses. I squeeze supply till it confesses. Make volatility undresses. When I whisper to a breakout, it don't fake. It blesses. Say what? Your girl love charts that climb slow. Your mama love cash that flows. She love it, baby. When I walk in, both say, Lord have mercy, cause the candles glow. Fucking right. Velvet cord. Heat too cold. Velvet cord. Whole market froze. Velvet cord. Green light glow. Velvet cord. Watch that money roll. I smell margin in the morning like it's fresh out the oven. You still praying to influence, I'm the one they be loving. I don't follow gurus, baby, I'm in gurus. Nervous when I step into a second, liquidity start to service. Be dangerous. I show this stereo politely, long conviction nightly. When the fire spikes slightly, I grip that flow tightly. My MP so clean it need applause breaks. My exit so sharp it leaves scars shake. You holding back like souvenirs from a carnival mistake. While I'm drinking compound interest, silk lapels inconsequent. Portfolio so think it need its own damn government. I don't flex, I demonstrate, dominate, accumulate. When I press confirm, the whole damn market hesitate. Say his name. Who run the floor? Velvet. Who closed the door? Velvet. Who made that green explode and roar? Velvet. Who flipped that dip into a score? Velvet. Who leave you broken, begging more? Good God! I don't change height, I lace it. Don't face race, I brace it. Don't pray for luck, I make it, then break it, then remake it. You talk about next big thing. I am the swing, I am the ring, I am the bell that sing. Even your mama say, Lord, that man too slick. Cause my candlestick's thicker than your whole watch list. I don't steal hearts, I repossess. I don't need luck, I repossess. Velvet cord. He run the floor. Velvet cord. Open the door. Velvet cord. Make it roll. Velvet cord. Did I say more? Velvet cord. Gaze obscene. Velvet cord. Portfolio lead. Velvet cord. Too damn clean. Velvet cord. King of the green. Velvet cord. Take it to the brim. Stay broke if you want to. Stay scared if you need to. But when that green light flash, you already know who led you. Velvet cord. Hit me. Velvet cords.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show. It is a beautiful Friday, February the 20th, a.k.a. TGIF, a.k.a. Happy Payday Friday, a.k.a. OPEX, a.k.a. a massive data drop type of a day. Folks, I hope you are ready because it's gonna be a wild day. So I feel like I have so many things to talk about. Yes, everything I just listed, OPEX, data drops, that's all happening very, very soon in 2 minutes, and that's why we're starting. So we're going to start off with that, going through all the craziness of data. From there, we have to get into some of the bigger picture stuff, because now Trump is saying that Obama released some information on aliens. And you might be thinking, what does that have to do with active trading today? And my question is, what does it not have to do with active trading today? So of course, we're going to be getting into that. We have a little bit of updates in terms of individual companies. I'll make that really quick. And then there's a lot of drama for those of you in the world of futures trading, especially sim to funded trading. Some of the biggest drama we've had in a while. So I'm very well aware of it. I have some thoughts. I have some opinions. We're going to be breaking it down, but it's going to be a little bit later on just because we have a lot to go over. But for any of you who are on Apex, you probably got an email last night and it was calling out one influencer, trader, large affiliate for basically gaming the system. And then everyone started screenshotting the email and sharing that. And then people started going into his Discord and screenshotting his messages. And it became this whole big thing. And did it spike my anxiety? Did at first I think it was about me. And I was like, what is going on? Because it came late. It was like 9 p.m. and your boy goes to bed then. So I was already kind of tired. So it was like all this going on. And then it was talking about trading silver. And I was like, I never trade silver. This can't be about me. And then I realized who it was about, and there was all this going on. So there was a couple minutes there where it did spike my old cortisol levels, but here we are surviving to fight another day. So I'm running out of time. Like I said, we have a lot to go over. And just to kind of show you guys this, well, I definitely don't want that noise anymore. We were listening to that.
Lost.
Oh, and now we're losing connection. That can't be good. But anyway, stock futures are little change ahead of key economic data, possible tariff court ruling. So lots going down today. Treasury yields little change ahead of key inflation data release. So in a mere 1 minute, PCE, GDP, PCE, and then we even have some data a little bit later. So I just want to put that out there. There's a lot of things that we could be listening for. Fingers crossed it's our boy Rick Santilli. Why is it? Is CNBC freezing us out from our boy Rick? Yo, Rick's in chat. Folks, if you're not putting Rick's in chat, please, there was a problem connecting. What in tarnation? Okay, there we go. All right, volume is up. Here is SPY. Heading into it, we have 20 seconds left. We are trading at 684.65. What's everyone's best guess? Bullish, bearish, somewhere in between. You only have seconds to guess, or it does not count. We're about to get GDP report, the inflation PCE report. A little bit later, we get the manufacturing numbers. We have a lot coming out, and I just want to know where our boy Rick is. All right, 3, 2, 1. The slowest response we've ever seen, and very, very muted. The initial response, not so bueno. Not so bueno, but that was awkwardly delayed, and it also was not that big of a response at all. There he is. There he is. There's our boy Rick. How's my hair? Hair check.
News. Personal income and spending for December, including some of the Fed's favorite
Let's turn his volume up a little bit.
At fourth quarter GDP, and the numbers should be populating. We're going into this with yields moving lower. And on the GDP side, a big disappointment. We're looking for a number around the 2.8 area. Comes in at 1.4.
GDP was a giant miss.
1.4 would be the lowest GDP since the first quarter of 25.
Inflation was higher than expected.
Negative, slightly negative, around 0.5%. Now, if we look at consumption, comes in as expected, 2.4. But that's about a full percent less than the sequential look at the final read last quarter. 2.4 would be the lowest since also the first quarter of 25 when it was 0.6. If we look at the pricing index,
that
not good news here. 3.6. We're looking for 2.8. 3.6 is 0.2 lower sequentially, but much higher than expectations. 3.6 would equal
those are some
where
less
we were
than
in the
stellar
first quarter.
numbers.
We got down
You
to
can say that
2.1.
again.
In the second
I'm
quarter,
really
25,
surprised we're not getting clocked right now.
Last quarter is
like
higher at
aggressively
3.8.
clocked.
Finally, if we look at the PCE core pricing index, 2.7, 1 tick hotter than expected, 2 ticks cooler than the rearview mirror, which was 2.9. Personal income up 0.3, exactly as expected. And last look, it's upgraded to 0.4. On the spending side, looking pretty sharp here, up 0.4. And last look, downgraded from 0.5% to also up 0.4. That 0.4, by the way, is 1/10 better than expectations. Now, if we look at real spending, accounting for inflation, it was up 1/10 as expected, but that's 0.2 light to history. It equals September. To find a lower number, you're going back to May of last year when it was slightly negative. Now, let's get into the meat on the bone. PCE pricing index,
a little higher than expected.
Month over month is 0.4%, 1/10 hotter than we were looking for, and it's double the rear view mirror at 0.2. 0.4, well, that would equal February of 25. To find a higher number, you're going all the way back to January of 24 when it was up 0.5%. Now let's look at the longer look year over year. Comes in at 3% on year over year PCE, and I'm sorry, year over year, PCE is 2.9. Excuse me, 2.9. If we look at month over month core, up 0.4, like I talked about, and year over year, up 3%. And 3% would be the highest level going back to April of last year. So if we look at these numbers and take them all in stride, I think the market did a good job of divining. And I would have to say that many, including Steve Leisman, thought this number would be hotter than expected on the PCE front. And
but we did not crack yesterday's low. Like the Nasdaq is getting there.
We have made a little bit of progress.
I honestly thought this would be the opposite of a God candle, like a giant red hell
on this side of the equation. On the week,
missing on GDP,
we were 2 years last Friday. Last Friday, a 2-year close at 341, Joe. That was the
rising
lowest
with Iran.
Close going back to SEP of 22. Right now, it's hovering at 346. And if we look at the 10-year at 406, it closed last Friday at 405. That was the lowest yield close going back to the end of November of last year. So markets are taking this somewhat in stride. If you look at the pre-opening equities, the Dow futures are basically on the lows of the session, down a little over 110. Back to you.
Thank you, Rick. Steve Leisman can join us now and make sense of some of this.
These
Steve,
are not
I figure
numbers.
If you get half of what people were expecting for GDP, that the yields would go lower, but you got the inflation maybe being a little bit hotter, so it can't.
More so surprised really, about the PCE.
Go lower. What did the government shut down? How much is that involved with the? That was during this period. And then didn't we had some trade deficit numbers that caused people like the Atlanta Fed to bring down GDP to what was that? Exports, but 1.4. If it was
We're coming up on yesterday's low pretty quickly here on the Nasdaq.
Joe, this is great. You set me up perfectly for exactly what I was going to want to say.
Close.
Two things about this number. The inflation numbers are bad. I'll get to that in a second. But the overall GDP number is not as bad as it looks and was not actually as bad as expected, which could explain the market's kind of calm with this. Let me explain this. Joe just said that trade deficit number came in yesterday, and it was worse than expected.
The low yesterday was 749.
When we estimate the fourth quarter GDP, of course, all the timing on the data is all messed up. But anyway, that number came in, and on the street, what we call the tracking forecast, the forecast that plug in the numbers as they come into their estimate, they came down.
Spies all the way down there.
I was thinking a number more like 2, but it came in quite a bit lower than that. I need to investigate why that is. But this precise answer to Joe's question is 1.15, or rather minus 1.15. That's what the federal government shut down, along with, by the way, the general decline in spending that is part of the administration's policy here on the federal side. But federal spending cost the GDP number 1.15 percentage points. So you can add that back, maybe, not all of it. The consumer was okay.
Silver might be having a crazy day
Joe,
here.
And I think it's pretty clear, is the inflation numbers. You have two different sets of numbers, the CPI number and the PCE number. Won't go into all the details here. The PCE number that the Fed follows has less housing in it, so that positive data we got on the housing side on the CPI
Obviously,
number. Not
very
as
bearish
important
momentum,
inside.
5 minute, 10
Also,
minute,
you have
30
more
minute, 4
healthcare
hour
inside
on
the
both
PCE
ES
number.
and NQ,
Fed
5
likes
minute,
the
10 minute,
PCE
30
also
minute,
because
4
it
hour.
shows substitution and it's a broader index. Anyway,
Getting
that's what we
cracked.
got. That's their preferred indicator. It is a little bit hotter, and I'll just conclude by saying, Joe, my take is that this gives some strength or support to those on the committee that want to wait a little bit longer and let this inflation pass through the system before cutting the CPI. Well, that gets support to the doves on the committee. Joe?
Right. So you can explain the weak GDP, but you can't explain the hot inflation numbers. So I was wondering. I was wondering because everybody's.
But
go ahead.
It's explainable, Joe. I need to look into the data. I don't know if there was some particular carryover or some particular element that raised it up inside the PCE this month. It could have been the healthcare component and the lower housing data in there.
Okay. All right. Thanks, Steve. And Rick, with us in studio, Aditya Bhave, senior U.S. economist at Bank of America. You were expecting around 2%, but the first thing you said for GDP,
Who is this? That's not Becky.
A large drag possible from the shutdown.
That's not
Is that
Becky.
part of this?
Absolutely. I mean, Steve mentioned 1.1 to 1.2 percentage points lost from the shutdown. So X of that, you were at 2.5, 2.6. That's totally fine, right, in terms of GDP.
Why is
100%
Governor
on
Ron
board with his
DeSantis
take.
coming
The concern here is prices. GDP's fine. The consumer's fine in the fourth quarter. Solid momentum going into the first quarter. If anything, now you're going to get fiscal stimulus hitting the economy very, very imminently. So the folks that are concerned about inflation, I think they'll stay concerned.
We have
Will
some
the
manufacturing numbers.
stimulus that you're talking
Actually,
about
PMI really
lead
coming
to,
out at 945. New home
Higher
sales.
inflation.
It's
It
OPEX.
could. I mean, the question here is
Michigan
we know
numbers.
that tariff pass-through so far
morning
has been
session's gonna
somewhat
be a pretty
incomplete.
crazy
So will this pickup in demand provide an opportunity for firms to now pass those tariffs through?
Do you think that that's been part of the problem, that they didn't feel
little
like they
bit of
could
recovery?
pass
The question
To a
is
degree.
this just going to
And so they were
be
eating
something that
some of
fails
it
and
with
then
margin.
pukes?
To a degree. So our estimate is
Did
that
anyone
about
trade this?
40 to 50 basis points of what you see in the core PCE right now is tariffs.
I
so
haven't
X
done
of tariffs,
anything.
you'd be at 2.5,
I've been a good
2.6,
boy.
which is better than
Here are my
3%, obviously,
accounts.
but it's still quite a bit above what the Fed targets.
Right. What is the going rate? What is full growth right now? What are we able to where are we able to grow? Could we grow at 3%? Real growth or not?
We very much could in the first half of this year. We wouldn't be surprised if actually we get 3% for the full year, because if you look at the policy stance versus where we were last year, fiscal policy is turning easier. The Fed has cut to a level that we think is neutral, possibly even accommodative. And then I think even trade policy, you're not going to get that kind of big trade uncertainty shock that we got last year. So the policy backdrop is just so much more supportive for growth this year. If we could do, I believe this is going to be something like a 2.2% 4Q over 4Q for 2025.
4Q
we could
over
easily
4Q.
do 2.5% plus this year.
You said the consumer's fine.
Yes.
Is that across the board?
No.
Fine?
No. It's a K-shaped consumer. When I say the consumer is fine, that's definitely a comment about kind of aggregates, averages, because that's what we deal with in macro. That's the most that the Fed can control from their perspective. But there's definitely, if you look at the data granularly, and we're able to do that using our internal data, so spending by folks that have B of A credit and debit cards, what we see is really nice acceleration in higher income spending, but some struggles with the lower income cohorts.
I guess that's the affordability thing, Steve, and why so many people just in what looks to be some okay in economic conditions, they don't feel like it's okay.
Yeah, and we'll see how they feel, Joe. This is a bit of a political race, an economic race. You have
Should I go stop
those
to break
refunds
even?
coming through, as you said.
Thumbs up, thumbs down.
I
Stop to
still
break
think,
even
and I
right
don't know if
now,
you and I
or give it
disagree
a
with this,
little
I
bit of
still think the
room. We're
economy
20 points
is
away from my
battling these
entry.
tariffs, which is why
Thumbs up,
I kinda
thumbs down.
side with
Stop to
Aditya
break
that, hey,
even.
this is
Thumbs
not a
up
bad
is a
number,
yes.
and I just want to show
Thumbs
you a
down
chart
is
that
no,
kind of
give it a
backs
little
up
bit
what
more
Aditya
room.
was saying. This is what we call.
What do you think we do?
Real
Break
GDP,
even,
real
sip,
final
sip,
sales
break.
GDP for private domestic purchasers. And what this does is it gets
risk
rid of the
management.
inventory distortions, the
Standing
export
red
distortions,
says thumbs
and the
up.
government distortions. And
Break
it's
even.
pretty good. It's a 2.4 number.
It's
We're
kinda
adding
close,
back a bunch
team.
of things that we've been doing 2.9. If you think about still, and I don't know what Aditya thinks about this, what potential growth is, we're maybe a half a point above it there.
Right.
So
stops at break even, freebie play. I'm either making $1,130 or I'm out for break even.
Whether or not there's a special case here on the inflation number, Joe.
Steve, I think potential growth is above 2%. The Fed keeps saying it's 1.8. I don't really understand that. We've been running well above that for a while. I think it's somewhere between 2 and 2.5%.
I think that's a fair number. I would only point out it's a little bit. You've been running 2 and having a little bit hotter inflation, so maybe the potential is a little bit lower.
Come on.
But there's a big question here, and it's a big question for the administration. Is this investment that the president talks about, is it coming to the U.S.? And what is the impact? And I mean beyond AI. We know AI is happening.
Up here.
But the president has talked about really sinking
There's a little protection at 62.
And building factories in this country that could be dramatic in terms of the impact on investment and employment in this country. If it's really going to happen, it could have a big impact on the numbers.
Looks like there's buyers here at 25.
Yeah, I think we're
they just
expecting continued solid growth in investment. I haven't had a chance to see
sellers
the
at 55. They disappeared. People are putting up orders and pulling them pretty quickly.
And the AI
this is
story,
NQ.
I mean, that's probably
Here's a look at ES.
Other stuff is maybe more of
ES, there's a wall up here at 68 and 67.
You attribute it
for
to
those of
tariffs?
you who use Bookmap, do you think it actually gives more information for ES because it's a more liquid product? Do you have like better success with that?
Wage increases?
I mean, look at that, like 300, 290. That's a clear wall right there. If I had to sell, I would sell right there. If I had to buy, look at these guys. Like these are huge.
Basically, goods inflation usually runs 0 or negative. Right now, it's running somewhere between 1 and 2%.
One-time event with tariffs, or
probably a one-time. But then services as well outside of housing have been somewhat sticky. If you look at the share of services that are running above 2%, it's well above where it needs to be.
I mean, these are giant orders.
Very good. All right, everybody. Thank you, Aditya. Thank you, Steve, Rick, Andrew. Thank you thank you.
You're welcome. Thank you. Okay. Coming up next, Florida Governor Ron DeSantis on big businesses moving to his state.
We got as deep as 24, and that's exactly where we saw some of those buyers for a second. We saw some of the buyers. No, that's not right. On NQ over here. Down here at one point, they were we might be coming back down to this zone. Get some of the action. All right, if you are just joining in now, good morning. We had some data. Data came out at 8:30. We got GDP. It was expected to be 2.8%. It came in at 1.4. Not good. Inflation, PCE inflation was expected to be 2.9 year over year. Came in at 3. Not good. Higher than expected inflation, lower than expected GDP. The initial numbers that we got at 8:30 a.m. about 14 minutes ago were not good, and that's exactly why we started to see this sell-off. I mean, you can see exactly where it happened. Starting here at 8:30, just sold. I'm showing you the NASDAQ, but obviously you're going to see a very similar reaction in the S&P 500. SPY basically getting clocked ever since 4:15 this morning. The Qs are literally at the low from yesterday. You have silver going up. You have gold going up. You have volatility also going up. You have the dollar going up a little bit here, kind of a muted reaction. So I think the interesting move to me is vol up, equities down, and silver definitely catching another bid here. So that's like kind of the skinny on the situation. The trade I did, I took a little trade, stops at break even. It's riskless. Do I want to let it sit? Do I think it's going to come up and come for me, or do I think that there's going to be a rejection right here? Once again, it is a riskless trade. As you can see, my stop's at break even. So the worst case situation for me is as if nothing happened. However, if I get lucky and it stops going up and actually vomits from here, I'll make $1,130 per account. So I want to be clear in terms of the world of risk management. I'm not the biggest fan of trading pre-market. So I really don't mind the aggressive stop movement. In fact, when I'm trading well, I'm always aggressively moving my stop to break even or somewhere in the money, and I find that's what the best traders do. You're in control of your risk. You're not necessarily in control of your profit. If it goes your profit target, obviously that is great, but you can't wave a magic wand and make that happen. But what you can do is limit the worst case situation, and that's what's in your control. So right here, I put myself $10 in the money, paying off some of the commission. So maybe I get lucky and it goes, or maybe, and this happens a little bit over 2/3 of the time, it comes back up and knocks me out. Remember, folks, I'm lucky to be a 50-50 trader. If you're coming in here and expecting me to make money on every single trade, that's just unfortunately not what happens. As much as I want it to happen, I am focusing on being profitable in the net, in the long term, which means that I just need to be super, super aggressive with my risk management. And hey, knock on wood right here, but it does look as if I got lucky. It turned at 58, and I think we saw some... Let me scroll out. We saw some sellers earlier. Let me scroll. I want to see where those sellers came in. Looks like whoa. Yeah, up here. Interesting. I might get lucky. This might just be a vomit all the way down. I suppose I can move my stop to that level now. 59. So, hey, $50. Definitely paying for the commissions. Definitely paying for the commissions. Jeez, that is loud today.
You can add Palantir now to the list of businesses
audio balance
and
on CNBC is horrible.
Who are relocating to Florida. The AI
this is the Ron DeSantis thing. I'm kind of curious what he has to say.
In the business-friendly state, including Ken Griffin, Citadel, Ken Griffin's Citadel, Amazon, Apple, others. Join us now. Florida Governor Ron DeSantis.
Old Ronnie.
Governor, it's good to see you. Thanks for joining us.
Yeah, look, we've got a lot going on in Florida, and you mentioned Ken Griffin, who had moved Citadel, a few years ago. Obviously, that has a big economic impact for a state. I mean, these are high-paying jobs. The footprint has really expanded. But one thing people don't talk about, and I can say certainly for Ken, he's donated in terms of philanthropic efforts.
He's donated a lot of money to me personally. He's a great guy
in Florida, and obviously he probably would have been doing that in Illinois had he not done that. So there's a big ripple effect that happens with all of this. Joe, I saw you in California, and I will tell you, this wealth tax is having a huge impact on people fleeing to Florida. 6 months ago, everyone was talking about Mindami causing New York to flee. I don't know that we've really seen that. But on this California thing, these are really, really big folks who are coming to Florida. We'll see whether they decide to move some business here. But I think they're in a situation where this has already either been taxed or it's an unrealized gain. It's a horrible tax policy to basically just seize some of the wealth. And then the founders of these companies, the way this provision is, they're imputed their voting rights as if they have equity. So for some of these big companies like Google, that's hundreds of billions of dollars that the founders don't actually own. And I think there's a sense of, hey, this is a ballot initiative.
Come on.
50% plus one.
My stop's at 59. My target's at 705.
Certainly our founding fathers didn't want to do that. So when I've talked to people, maybe it gets on the ballot, maybe it doesn't, maybe it passes, maybe it doesn't. But eventually something's going to get on the ballot and something's going to pass. And so I think people are taking action accordingly.
It's safe to say you're one of Mamdani's biggest fans, I guess.
Well, I think we're going to see. I don't think that story's been written yet, but I do think we're going to see an impact on that. I think it'll take a little longer.
I prefer that it stays below this high here at 38. Just will psychologically make me feel better. And really, I wanted to take out 22. But there's been a secret wall here at 25 that is flashing on Bookmap.
He's talking property taxes
every single
now,
time we come into 25, it's bouncing.
Some other.
Dude, Mamdani's 9.5% increase on property taxes is the dumbest fucking thing ever.
Phase them out
it really is.
Completely?
Well, first of all, didn't he run on affordability? How is it more affordable to raise property taxes on working class people? I just don't understand that. So what we're
He's screwing
over
everyone with the 9.5%. And he's raiding the rainy day funds, too.
Primary, what we
I have
call
a sneaky suspicion he's going to be a one-term mayor.
And the way it works in Florida is that's about a third of all the property tax revenue because, these local governments are taxing investment properties, snowbirds, second, third homes, businesses, all those other things. And so the context of this is in 2019,
what do I think about the Apex email? We're going to be going over that. We have a lot of time this morning just because we started early, so we'll be going over it.
$60 billion. So if you go back to that 2019 level of spending, you give them population growth, you give them the inflation, even add a couple % a year on top of that, you're not even close to $60 billion. So they're obviously getting a lot of this because property values have gone up. A lot of people moved to Florida, particularly during the COVID era. But people need relief. And what's happening, Joe, is you've got older people that have been in their home for a long time. They've had protection against valuation increases for 30 years. they're not downsizing, because if they go from a
about
3
to
or
knock
4
me out.
bedroom
Yeah,
home
it happens.
to a condo,
I took a shot.
the tax basis is going to be so much higher that
I
they
took a
can't afford
shot.
it. So that hurts young people having access to be able to do it. So it needs to go on the ballot. It needs to get 60%
Maybe I'll get
of the
lucky.
vote, and we'll be working on that through the balance of the year.
Governor, you've had all this success getting all of these folks to come to Florida. That's the good news. The harder part seems to be the new challenge. You hear from folks who have moved who say it's hard to get into schools. There's all sorts of housing. Obviously, the price of housing has gone up. That
Feels
can
like
be
it's
considered
coming
a
for
good
me,
thing
folks.
In certain cases, for others, what do you see now as the biggest challenge of this success, if you will?
That's a bummer. It was a good
Well, I
trade,
think on some
and
of the
whatever.
school stuff,
Hey,
I mean,
green is
that
green.
Is a very, very elite problem, in sense they want certain types of schools that maybe they had in New York City or whatever. We've got a lot of very good schools, charter schools, public schools, and even traditional private. I think they're looking
knocked
at things
out.
that
Whatever.
are a
Green
little
is green.
different than what
Made
the typical
$200
family
per
would do.
account.
And people
Decent
are
start to
starting
the day,
build
especially
those,
for a person
at that level
who is
to
not
kind of
really.
attract, the talent. And I think that'll
let
all
me
work
clean
itself
this up
out.
so you can
on
see
the
a bit more.
housing, I'm a big believer in
Not the biggest
we
pre-market
shouldn't be
trader. So
trying
hey,
to,
$200 is $200.
Juice the housing market. We shouldn't be doing it. These things go in cycles, and I think what happened was
that's
during
just gonna be
COVID,
the
there was
random-
a massive rush in Florida. You could sell a 3-bedroom house in Newport Beach, California,
If this
for $2 or
breaks
$3
down
million,
from here, I'm gonna be a little
and you
bit
could
bummed.
get 3 times the size of that in like a Sarasota. Well, that caused these values to go up. These things kind of go up and down. I think
this is getting a little bit boring. So anyway, yeah, I did a quick little pre-market trade. It didn't go to my target, but hey, at least I was having a reasonable enough risk management that I did make some money. $200 on 1, 2, 3, 4, 6, 7, 8, 9, 10, 11, 12 accounts. So 2.4K, a little bit less than 2.4K. We'll call it 2.3K. Not a bad start. Gives me a little bit of a 10-point buffer when the session gets going, and I have a feeling based on how it looks like today's volatility is going to be a little bit more nuts. It is probably nice to have a little bit of an extra 10-point buffer. So with that in mind, yes, I just want to let you guys know we got a lot of data reports. 8:30 GDP coming in half at what expected, inflation coming in higher than expected. That's why we're seeing a little bit of a red, especially from 8:30 till now. The Qs aren't in dangerous territory. Let me show you what's going on the daily chart here. We are at this low, and you can see ever since Wednesday, January the 28th, lower highs and lower lows. That is by definition a bearish structure. I mean, there's no ifs, ands, or buts about it. If you have lower highs and lower lows, that has to be bearish. And then when you consider that structure and put it with momentum, well, we puked below all the EMAs, the exponential moving averages. We popped all the way back up, and then it got rejected right there. So we're on the south side of momentum. So it is bearish structure and bearish momentum. And now we just got some bearish news and we're sweeping some recent lows. So the setup, not so bueno. Now, of course, I'll be the first to admit, just because things have been bad doesn't mean it can't change, especially in the last, 2 to 3 weeks. But if I had to predict, which I really don't like doing, it does seem as if there's a little bit more pain coming before a little bit more relief. Even here on the SPY, we had equal highs, and then it started to break down, equal lows, some more range bound. But look, we are on the south side of momentum. So obviously something to consider. If we start to sweep these lows, and I'm talking not really intraday, of course it could happen intraday, but I'm talking more of a medium time frame. If we start to sweep these lows, yeah, the next obvious target is the lows that we saw before. It's not the most insane thing to see the SPY down to 675. It's not the most insane thing to see the Qs down to 593, 594. The Russell is holding up a bit better, but even that might be breaking the downside of its consolidation today. Bitcoin's been weak forever. I guess technically this is consolidation, but we're not breaking out or down. It's actually closer to breaking down. So I just want to put that out there in terms of some of these larger things. Right now, we do actually see silver potentially getting a breakout, looking at this trend line, a potential bullish breakout, overshooting the EMAs, recovering. Not a bad risk reward setup. Like, you could be risking these recent lows, and if you catch it and it pops and you go fishing for that great white, baby risk relative to potentially massive rewards. So interesting thing to play out there. Gold, same thing. We actually have some higher highs and higher lows after this vomit. So I'm seeing strength in commodities such as gold and silver. Equities, definitely a little bit of weakness. And I do want to check on oil just because of the whole Iran thing going on right now. oil is also strong. So commodities are looking good across the board. Equities are looking weak, and crypto is currently looking weak, is like, I guess, how I'm seeing things. And it's going to be probably a pretty wild day, which means we should get prepared for some of the things to look forward to today and this weekend. Trump's Iran ultimatum sets stage for strike during the IAEA meeting. That's way too many vowels. But anyway, yes, partly why is oil going up? Well, it's the tensions with Iran. Trump weighs initial limited strike to force Iran into nuclear deal. President considers a range of military options, but has said he still prefers diplomacy. So we're probably going to be hearing quite a bit about this over the weekend. The U.S. military hardware pouring into the Middle East. So as you can see, look at the warships, fighters, and missiles massing at Iran's doorstep. They are getting ready for something. Now, obviously, just being a member of this world, hopefully it doesn't get to there. Obviously, I don't think anyone involved wants to get to the point of bloodshed. Obviously, Trump, I think it's good that he's continually reiterating diplomacy. I think that's a very logical, reasonable, moral way to do it. And here's to hoping it doesn't spill over. But if oil is any indication, obviously tensions are getting pretty up there. Trump could attack Iran in days. What's at stake for the oil market? Well, more than just the oil market, obviously, lives are at stake if you start slinging around missiles. So I want to kind of put that out there. But anyway, U.S. strikes on Iran could precipitate a big oil spike in the Islamic Republic is made to the Strait of Hormuz, I believe is how you say it, unsafe for commercial traffic. So it has to do not a lot with oil drilling, but more of the shipping routes that could get impacted if this strait is shut down. And this has happened in the past, so I just want to put that out there. More than 14 million barrels per day of oil passed through the strait in 2025, about a third of the total worldwide oil exports transported by sea. So when you have 14 million barrels per day that are no longer getting shipped, obviously that's a hit to supply, and if demand remains constant, what happens? The equilibrium, aka price, obviously it's going to be going up. Oil prices hit 6-month highs after Trump warns Iran of bad things if there is no deal. U.S. President Donald Trump has given Iran 10 to 15 days to make a meaningful deal over the nuclear program, or really bad things will happen. Remember, this was written today, so maybe it's not going to be this weekend. It might be like kind of 2 weeks out, so we might be talking maybe early March, something like that. Oil prices held a 6-month high on Friday morning today, basically, as energy market participants continue to closely monitor heightened geopolitical tensions. Strategists at Barclays say if conflict is imminent, it is likely to be short-lived in our view. So it might just be more of like volatility and wildness or something like that. So worthwhile to pay attention to. On that particular chit chat on Air Force One, I also want to let you know about some other crazy stuff. Trump says U.S. will release files related to aliens and UFOs. Folks, I have to say, I've said it before, I'm going to say it again. Our version of the simulation is wild. I love it. This is real news going down in presidential archive. Trump says U.S. will release files related to aliens and UFOs right here. Based on the tremendous interest shown, I will be directing the Secretary of War and other relevant departments and agencies to begin the process of identifying and releasing government files related to alien and extraterrestrial life, unidentified aerial phenomena, UAP, and unidentified flying objects, UFOs, and any and all other information connected to these highly complex but extremely interesting and important matters. God bless America. He put this out yesterday evening on his Truth Social, and it was all on the heels of this. Trump orders release of UFO government files. President's decision follows Obama's podcast comments about aliens. And just to give you guys a clip from Air Force One right here, let me make sure. Hopefully the volume's all right, but we're going to find out.
Barack Obama said.
Hang on, that is way too, you guys can't hear that. What do you have, the hearing of a bat? What do you have, the hearing of a bat?
Are real. Have you seen any evidence of non-human
let's get
visitors?
this.
Barack Obama said.
There we go.
Obama said that aliens are real. Have you seen any evidence of non-human visitors to Earth?
Well, he gave classified information. He's not supposed to be doing that. You know?
So aliens are real?
Well, I don't know if they're real or not. I can tell you he gave classified information. He's not supposed to be doing that.
Well,
he made a big mistake. He took it out of classified information. No, I don't have an opinion on it. I never talk about it. A lot of people do. A lot of people believe it.
A lot of people do.
Do you believe it, Peter?
Well, the president can declassify anything that he wants to. So if you want to make an announcement,
I may get him out of trouble by declassifying.
We know Barack Obama said.
So it's all on that, and then obviously following up on True Social that he might be releasing it. So aliens are real. Well, I don't know if they're real or not. I can tell you he gave classified information. He's not supposed to be doing that. He made a big mistake. He took it out of classified information. So some hot alien news. And is it real? Is it not real? Is it all a smoke and mirrors technique to, I guess, get us to not pay attention what's going on with Iran, that island with Epstein, or any other crazy political thing? I have no idea. Is it real, legitimate news? Maybe. Is it political theater? Maybe. Is the truth somewhere in the middle? Also, maybe. So just want to throw that out there. Like I said, this version of the simulation is absolutely wild. Please don't forget, talking about the larger scene, that we also have individual news as well, obviously, in terms of earnings. Next week is pretty much going to be the final week of earnings season. Everyone still wants to pay attention to NVIDIA. You know that meme of like, oh, it's like one little beam holding up the building falling over? That is once again probably going to be used this week for NVIDIA when everyone's watching the equities market of will NVIDIA save us again? But on that note, how did Open do? Open is a clear pump and dump, and it's actually up 15%. That's crazy. I have a feeling that all of these pumps are to be sold, and this thing is coming all the way back to where it was, sub $1. This is an absolute trash company, and it's literally just a Twitter account pump and dump scheme. So be very, very careful with it if you happen to be involved. Anyway, looking forward to next week. NVIDIA is in talks to invest up to $30 billion in OpenAI, according to a source. NVIDIA is in discussions to invest up to $30 billion in OpenAI as part of funding round that could value AI startup at $730 billion pre-money valuation. Wow. So that means it would make its public debut north of $1 trillion. That's crazy. The investment is separate from the $100 billion infrastructure agreement that OpenAI and NVIDIA announced in September. So basically, what's an extra $30 billion amongst friends? The $30 billion is not tied to any deployment milestones, according to the person, maybe even the AI. Who knows? So just want to share that NVIDIA is in this interesting situation of not only are they selling the shovels for the gold rush, now they're basically saying we're going to take a large part in all of these mining companies if we're going forward with that metaphor. So just wanted to share that, kind of interestingly setting the stage for NVIDIA. And as of this moment, what is the expected move on NVIDIA? No, we don't need that. Earnings. I want to say it's the 25th for NVIDIA. Yeah, as of right now, the implied reaction is just beneath 6% for NVIDIA next week. Once again, reporting Wednesday, February the 25th, after market close, 6% move. So definitely going to be, adding a little bit of sprinkles of volatility to the overall situation. Speaking of that, let's come back to the overall market. How are we looking right now? Little bit of a bounce that I guess is failing. From a technical perspective, I wouldn't mind this short right here. We basically ran up to these previous highs. You could take that short, 68 real time. You're risking 95. I don't love it because your risk is just below a key level of 800. But overall, it's just obviously we're selling off and it's going short into some short-term strength. So I don't mind it. I'm not going to take it. I honestly don't even know if I should have taken the trade I did today just because it was so early. But hey, green is green, so I can't complain about that. All right, lots of things to talk about today on top of everything that we've already spoken about. So first of all, it is in fact a Payday Friday. If you are listening right now, if you are paying attention right now, get involved. It is a free raffle, free giveaway. All you have to do is like, retweet, and follow, and you will be throwing your hat into the arena for a potential prop account. We're giving away from FFN right here. 50% off, buy one, get one, no activation fee. So if your goal is to own 2 accounts, this is definitely your cheapest way to do it because it's 50% off. And when you buy one, you get one. and there's no activation fee. So if you're a person who like specifically wants 2 additional accounts for sim to funded futures trading, FFN is the place to do it. And then Vanquish Trader is sim to funded but for options. So FFN is for futures, Vanquish is for options, and that's right here. 50% off if you use that code Goonie. Obviously, it's the same code over here on FFN. Pretty much all my codes are always going to be code Goonie. And if you guys want, at Market Open, we could do another DGen trade. We forgot to do that yesterday. You know what? Let me start a poll. Start a poll. All right, so my question, market. How lucky are we feeling today? Market at open. Are you guys basically I'm asking you for the first minute. I'm asking you, how do you think the market is going to go from 9:30 to 9:31? Like literally the first minute of the day. Do you think it's going to be a green bar or red bar? The first minute, the first 60 seconds. That is the question. I'm not asking you on the day. I'm not asking you your interpretation of the macroeconomic impact of the GDP, of the PCE. I'm literally saying, hey, if you had to guess from 9:30 to 9:31, do you think we're ripping it or do you think we're skipping it? So that's the only question. I'm not saying, oh, like, where do you think we're at the end of the day? Where do you think we're at the first half hour or something like that? We're going to degen it in about 23 minutes, a little bit less, and we're going to see if we can make some money on this Vanquish account, which obviously shout out to Vanquish, shout out to FFM. They are the sponsors of today's Payday Friday giveaway. And anyway, on top of that, we're going to be picking some people from Twitter. We're going to be picking some people from the Goonie Trading Discord. And then all of those people, if selected, are going to win a prop account. And then we're taking all those winners and we're going to put them into a marbles race. And then the winner of the marbles race is going to be getting $150 of cold, hard cash. The other thing I want to bring up today is a lot of the drama. First of all, there is a crazy deal right now running on with Lucid. So 50% off any eval, limit 2 per trader. Use that code Goonie. I just want to let you know they emailed that out to everyone. So just so you know, that is there. And then Apex is running a giant 90% off deal. And then this is kind of, I'm bringing this up because this is the big part of drama today. Let's see if I go right here, is it gonna, yeah, right away. Literally the first thing that loads is the drama related to what's happening here. This is crazy. Looks like a statement was made and the cat's out of the bag that Brian Stonk, Apex Fallout. I recently been saying on live stream, if someone tries shady stuff with the firm and gets caught, be a man about it. Brian, okay, so before I come back to this, let me like it so we can read what happened here in the Discord, but I think I need to offer a little bit more context. I'm curious how much I have to scroll before we can see the email because everyone started popping off. They were popping off. I mean, it has to be somewhere. I mean, it was literally all I was seeing. I guess if I search Apex, let's see what happens here. Shout out to Nutty Bar. Oh, so this is really cool. If you're on Apex, they're rolling out a whole new system kind of showing you your trades and where you're at. Do you have any violations? Where are you at your consistency? HAs? Like, it's just a nice checklist of like, are you following it? Are you not following it? I think it's really cool. You can see if you violated it. The violation count. This has to most likely do with MAE. I've broken that same rule and it gives you the details. Very cool. But anyway, that's not the point. Last night, everyone got this email and basically they were seemingly putting a trader on blast. Between January 15th and the 27th, large balances were showcased across 18 PA accounts and promoted as evidence of advanced analytics and market mastery. What was not shown during the same period, 31 additional PA accounts were blown, 47 total PA accounts were blown in January, over 1,200 MAE violation alerts were triggered in 7 days, 658 MAE pings occurred on January 26th alone, positions were repeatedly held 70 to 90% beyond MAE thresholds, hedging between gold and silver occurred on January 23rd, generating improperly obtained simulated gains. The accounts that hit were highlighted, the dozens that failed were not. This is not consistency, this is statistically risk cycling. So they're calling out one trader. And if you've been paying attention to the drama and the lore that is this world, it was very quickly figured out that they were talking about Brian Stonk, who is just obviously an affiliate, a trader on this platform right here. And he hasn't really said anything quite publicly. I want to see what else the drama is, but as you can imagine, figuring this all out. I think it's kind of a savage move on Apex's part to be calling it out, because you have to save face in a certain sense. Because if someone's breaking all these rules and then they request and then they get denied, everyone's going to be like, oh my God, how could you deny that? Like, what do you mean? We saw them trading all that money, give them that money. It's like, whoa, whoa, whoa. Like, as a company, they know that they've been breaking the rules. So I think it's a way to like get ahead of the backlash that would inevitably ensue when the payout gets denied. But obviously it's going to get denied. And what I want to show you, hang on, I think I already liked it. Let's see what some of the fallout's been. So right away, people, like, just because the dates were there and it was trading gold and silver, this was the one guy that was doing it at such big levels, so everyone put it together. But here we go. Did you Apex calling you out in an email? Which one? Oh shit, the email was about you. They calling you out. Not fun, Brian. Hopefully it's not towards you. Never seen such a long email from Apex. It's definitely towards him. Yeah, I was reading it. Maybe it's because he ran us up trading silver during volatility. Well, it's not just that. You're allowed to run up accounts. You just can't break all those rules incessantly and then highlight the ones that you're doing well on and blowing out the other ones. Lost his accounts. Apex is not currently an active partner. There's a contractual matter being handled privately and professionally. I won't be discussing details. There's not a contractual matter being handled privately and professionally. It's just that they're banning you from the platform for breaking all the rules. Like, that's what's being handled. But I do believe that, hang on, what is this one? Not shown. Okay, yeah, that's blah, blah, blah. There was another Discord one that I saw. Hang on, I feel like it should reload. I can't wait for your apology, Tor. What is this one? Oh, this is guy I have blocked. I took tons of payouts. Yeah, this is just another scam artist. But that's not really the point of what we're talking about right now. Where was it? Was it Market? I can't believe I have to write this in, but I believe her name is Market Mommy. So strange I have to write that in. Oh, dude, everyone. I see the messages and I know many of you want clarity. I care about this community and I would normally address things immediately. However, I've been advised to seek legal counsel before discussing specifics publicly, and I'm taking the advice seriously. I'll share more when appropriate. So as you can imagine, he shared that within his own Discord, and then I believe it was Patrick, if I can spell today. Dude, is my brain running on half speed for some reason? Wyland? Do I not follow him? What is it, Pat? What? Oh, here. Because then right away he came in and said, I can tell you exactly what your lawyer is going to say. Stop trying to make yourself look profitable and bragging about making millions in a week in sim funded. The code smart rebates. Yeah, that's a rebate thing. That's not really the point of this. But like, it's going to be really tough for a lawyer to spin anything about this at all, because if you're breaking the rules, you're not going to get paid out. It's honestly that simple. If you break the rules, you're not getting paid out, and there's nothing a lawyer can do about it because you knew about the rules beforehand. It's one thing from a legal perspective if you feel like you followed all the rules and didn't get a payout, but if you break the rules, clearly you're not going to get a payout. And obviously we're talking about Apex, but that's true with any sim-to-funded firm. No sim-to-funded firm is going to pay you out if you're breaking the rules. Like, that's just how this works. And it blows my mind that people are somehow trying to contort it in a manner that like, no, I know I broke rules, but you should still pay me out. That's not fraud or anything on the sim-to-funded part. Obviously, that's just the traders trying to use, I suppose, internet clout and internet drama and the internet's proclivity to dogpile onto these firms when payouts are denied. But I think we have to be a little bit honest about when and why you're getting denied. And I mean, I've been denied and I try to be upfront with it. Folks, right here, I explain every single time. Denied. Apex Trader denied me 30,000. In this video, I explain exactly what happened. I knew it was going to happen. I broke a rule. It was a soft breach of the MAE. It was on me. Like, I broke the rule. So I'm like in no way surprised it got denied. Right here, denied again. Same thing. The FML isn't because of Apex. It's because I was stupid in a trade I thought I had risk on. I didn't have risk on, and I accidentally just went right below the MAE. So I knew it was going to be denied again. When you are getting denied for these rules, it's a soft breach. You don't lose your accounts. You're not getting blown up. It just means you then have to trade again for a good period of time to get approved. And guess what? When you actually start following the rules, paid out, paid out. Like I've had 5 approved payouts. Like when you follow the rules, you get paid. If you don't follow the rules, you don't get paid. It's honestly that simple. And this idea of like starting out the accounts and trying to run them up right away and demanding a large payout, no, this is a game of like consistency. You're supposed to be trading well over a period of time. For me, am I right now waiting for the $1 million payout? Yeah, but that was by no means achieved in the first week. It wasn't even achieved in the first 5 payouts. It took me 73 trading days. I was doing it slowly but surely. And hey, folks, if you need proof of it, just come right to my profile because I posted proof of every single one. It was never one of these ones where I was attempting to get lucky on just one big trade, max contracts and running up the account. I was every single day going for anywhere from $1 to $2, maybe sometimes $3,000 worth of profit. And on the times that I accidentally broke MAE, I'm going to be honest, it took me a little bit to wrap my head around what the rule was and wasn't. But as soon as I got a little bit more comfortable with it, oh, okay, this is what it is. And I've said this a million times before. But if you are running into issues with MAE, all you have to do is set up an ATM strategy, compute either 30 or 50% of your buffer and just auto set in your stop loss so you just don't get hit by that rule. It's a very, very easy fix. Whether you're in the 30% or the 50% bucket of your buffer, multiply your buffer by either the 30 or the 50 and then do the basic backwards math and just put in your stop loss, and then you're never going to have to worry about that rule ever. It is extraordinarily easy to avoid breaking that rule. Actually, I think it's so easy that I just want to clarify for everyone in this community. Do you have any questions on MAE at all? Because that's really what this is all about. Granted, there's other things that allegedly Brian Stonk was doing with the churning of accounts and basically hedging of going long on gold and short on silver is equivalent to going long on ES and short on NQ. Those are correlated assets, highly correlated assets. You can't do that. You're basically playing the game of saying, hey, some of these PAs are going to get money, the other ones are going to get blown out. I'm going to hide the blown out ones and then just kind of like show off the ones that went well. That's not real trading. I think another way to be safe is actually to basically trade all your accounts together. I'm not necessarily saying that's appropriate for everyone, but another way to potentially be safe is obviously you're not hedging between accounts if you're trading all of your accounts together on all of the exact same thing. Clearly, you are not hedging. So that's another way to potentially stop like one of these violations. And then, of course, another thing I'm reading a little bit about is contract sizing. Even though you have a max amount of contracts you can trade, you're not supposed to trade all of those at first. You have to get a certain profit level before you can go to your max amount. So I believe like on a 50K account, if you have less than $1,000 of profit, you're supposed to only be trading 4 contracts at a time. So that's just a thing. Check the FAQ and just see like how many contracts you can trade. So that's another little one. But a lot of these are easy to avoid. They really, really are. So the contract sizing, just double check the FAQ at that moment in time. How many can you trade? For the MAE, set up your ATM where you put your stop at the worst level it can be before violating that rule. Hey, that's all right. It's just an unrealized drawdown. Put your stop exactly where you need it. And then obviously the most evident one of gaming the system is trading the opposite directions in correlated assets. Just don't do it. You're not trading. You're betting on half your accounts making a good profit and you're burning and churning the other ones. It's a super, super easy one to avoid. Just basically don't try to cheat the system and you're not going to have issues. So for me specifically, I've never been doing the opposite directions on like gold and silver, something like that. I haven't even really traded silver. So that one's not one to worry about. The contract limits, I always try to trade only 1 or 2 contracts anyway. So that's an easy one to just not get clocked on that rule. And then in terms of the MAE, yeah, it's a pain in the butt at first because it has to do with unrealized and technically you have more realized drawdown on the day, but then you have to scale out of the trade and scale back in. Yeah, it's a bit of a pain in the butt, but the easiest way to avoid it is the ATM. Like I'll be the first to tell everyone, I'll be honest about it. Yeah, it takes you a little bit to kind of get used to it and understand what the rule is and how it properly applies, but I'm giving you the solution right now. If you want to stop having MAE issues, just use the ATM strategy, and this is a good rule for trading in general. It's basically your loss management. If you have your loss management in there, you're gonna be good. So with it, like I get that there's a lot of drama, but I guess my hot take on this is if you violate the rules, and yes, I know we're talking about Apex, but I think this applies to anyone, regardless of your status of being an affiliate, an influencer, if you have a big following, a small following, no following at all, I think this is how the game should be done. If you follow all the rules, you get paid out. If you don't follow the rules, you don't get paid out. I don't think influencers or people with a following should really in any manner get extra like wiggle room or anything like that. I think we should all be held to the same standard. And also on the other side, I think all of these SIMDA-funded firms should have the most high-end level of communication of what's going on and what's not going on. I think all traders should be following all the rules, and I think all the rules should be explained properly, clearly. There should be no questions about it. I think that's like the fair meeting in the middle. High-end communication where we all know what's going on and what happens with a soft breach, a hard breach, where's the lines in the sand, so there's no wiggle room. And then I think all traders, upon understanding that, should be all playing the same game. Like, I think that's what's going on. So for me, as I've already showed you, I knew I broke some of these MAEs and I learned what it was. I understood that, like, oh, okay, like I thought about it. And right here, then right away I got approved because I realized, okay, I was thinking more and more about it, like what's the best way to protect me from breaking the rules. And it just came to the ATM. And ever since then, I just don't have to worry about it because the ATM was always being set in there. So that's how I think about it. I mean, of course, I'm more than happy to answer your questions and whatnot on this, but it is obviously the hot drama of the day. But do I think Apex is wrong for basically getting rid of a trader who is allegedly gaming the system and not actually trading? Not at all. Like, no, like if you're gaming the system, you're gaming the system and they caught you. And it's one of those things. I mean, you could read the email. It's not like, oh, it's questionable. Like they have all the evidence. They have all of the trading evidence right here. All of the evidence. And the bad one, hedging between gold and silver occurred on January 23rd, generating improperly obtained. Like, if you ask me, the MAE, that's a soft breach. Okay, it's breaking the rules. It is what it is. But right here, trading highly correlated assets in different directions and blowing out some of your PAs while the other PAs are good. And then expecting those to get paid? No, if they catch you doing it, yeah, at minimum, they should kill the PAs, they should kill all those profits, and they should force you to restart. And then obviously, if they catch you still doing it, right here, one of the actual execution patterns, the strategy presented publicly as deep silver analysis was actually at times traded as follows in just one example. Wait for 6 p.m. ET open. Allow silver to gap upward. Immediately short into the gap. If price moved against the position, continue adding. No stop losses. Continue averaging down. Either catch a reversal or blow out the account. So yeah, it's the same shit over and over again of just trying to get a huge gain a massive, massive buffer. And even then, like gaming of the system, it doesn't make the most sense because for your first 5 payouts, your payout is capped anyway. So I don't know. It's not legitimate trading. And I could see where they're coming from that. And what is nice is I would say that they're actually getting a lot more. The system at Apex is very much advancing. Like if you log into Apex and go down to account details, you can see all of your accounts and like what's going on there. So they are making it easier for the trader to understand all the specific rules, whether it's soft breach or hard breach, and when is it happening, what is it not happening. So as I was alluding to before, of like the communication level being at the appropriate level, it seems like they are getting there. Now, obviously that platform is in beta right now. Like they still have some work to do on it. But you could check it out for yourself. And I really like the direction of where it's going. But if you have any specific questions on any of these rules, I'm more than happy to share my own thoughts and opinions of the best way to avoid the rules. But once again, if your issue is contract sizing, just go to the FAQ and it's pretty simple. Never trade more than the contracts that you can trade at that moment in time. If it's MAE, just set up the ATM. So just either do the 30 or 50% multiplication out by your buffer and then set the stop to where you know you're not going to violate that rule. Obviously, you can't be trading in opposite directions on the same contract or across different accounts or on highly correlated assets. So that's a thing you just don't do. And then I'm trying to think of any other, like those are the major rules. Like that's pretty much it. Yep, I like looking at 600 blown accounts. I mean, I've blown many, many accounts. To me, I see people on the internet like kind of focusing on that. To me, that's whatever. You're just playing the game over and over. It's more of, are you blowing those accounts with real trading? or with bullshit trading. So to me, the account size, whether it's evals or performance, that one doesn't bother me at all, because there's an aspect of how long have you been doing it? Are you blowing all those accounts in 1 month, or are you doing this now for years? And also, once again, whether it's one account or 10,000 accounts, once again, is it an attempt at legitimate trading? Or is an attempt at like, I'm taking half and I'm going long, I'm taking half and going short? You're allowed to do that for evals. You can't do that for performance. And people are basically saying, okay, I want to find a variant of that for performance, which is so evidently not allowed. So to me, the PA number, the eval number, and maybe I'm just saying this because I know I have high numbers. Like, I have thousands of these accounts. I have thousands of evals. I do. Like, whatever. You guys have seen it. You've seen the dumb shit that I do. But to me, that's not the big thing. The big thing is, was it traded legitimately, or was it an attempt to game the system? Like that's. But once again, these are my own opinions. Maybe you agree, maybe you disagree. But obviously, I wanted to cover this because a lot of people, this is like absolutely insane. A whole lot of people are looking real dumb this morning in the prop space. Y'all wanted to tear Mark and Mommy down for asking questions about shady looking behavior from these influencers, and now look where we are. Yeah, I mean, they got caught. But also, I think if you just look at the account number, like, I don't know, looking back at this now, one of my savings grace is that I was trading all 15 of my accounts together. Like, that is one of the nicest things. Like, literally just the 15 accounts, I wasn't trading them in different directions, doing different things. I copy traded all of my 15 accounts together. So it's nice that I just don't have to worry about that part of it. But once again, this is all speaking through the lens of the fact that I still don't have my decision. My gut is telling me that they haven't even reviewed my payout request for $1 million, because it feels as if they were just looking into this issue, like the situation that is now very, very public. So as I've been waiting over the past 2 weeks thinking, oh, just like before you know it, I'm going to be getting my response, I have a feeling that they haven't even gotten to my account. Like, I'm honestly just guessing on this. Like, once again, I am just guessing on this, but I have a feeling, because there's many questions right now. What about my payout? What about my payout? I have not heard anything yet. And I have a feeling the reason why I haven't heard anything is, first of all, this process does take time to do the anti-money laundering, the know your customer, and to review all of your trades. So that all takes time. And on top of that, clearly they're dealing with other forms of large drama. So I have a feeling, if I just had to guess, maybe they had said, okay, like, we need to get to Matt's case one of these days. So right now, I'm just waiting. Do you feel the rules in place are a game the system on a... Do you feel like the rules in place are a game of the system on Apex's part? I don't even know what that means. What's a game of the system on Apex's part? Apex has rules. No one is forced to trade with Apex. If you like Apex, you look at the rules and, well, I guess you look at the rules, decide if you like them or not, and then you either go with it or you don't go with it. I would have an issue if they were changing the rules retroactively, of saying, okay, here's a brand new rule that we're now applying to everyone historically with their trades. But I don't know of them doing that. If anything, I feel as like, maybe you guys could prove me wrong on this one, but I feel like they've been pretty consistent about what the rules are. And no one is forced to trade with it. If you like a different prop firm's rules, we'll go use that one. But I guess I would want to answer your questions. I just want to make sure I'm answering the proper question here. But before we do that, okay, we have 50 seconds left, which means we are going to have a little bit of Vanquish fun here. What did you guys vote? Ooh, okay. You guys are close to 50-50. What did you guys vote over here on Rumble? Rumble, you guys need to speed it up. You do not have much time. Rumble, you got to get going. Someone's got to type bullish or bearish, because YouTube was very split. Rumble, you got to speed it up. We're running out of time. I'm freaking out right now. Red open minute. Ubuk, this trade is for you. Where are we at? We're at 35. 35. Market. All right, here we go. We are live. Create order, go. All right, we are, get rid of that. I don't know my average fill. Average fill 25. All right, close with single order. 27. All right, we're typing it in as fast as we can. Typing it in as fast as we can. We got to fill at 25.6, and I just threw in an order to try to get out at 27. Come on. I saw green for a second there. I did see green for a second. I'm seeing more green. Now I'm seeing red. A little bit of red. Now a lot of bit of red. A little bit of red. Come on. So these were long puts because Ubuk guaranteed me. He said, Matt, I guarantee you. I mean, it should be going in my favor. I'm seeing a little bit of green. Maybe we need to go to the 15 second over here. I saw a little bit of green. Is it going to go down a little bit more? It was long puts. And to be fair, it wasn't just Ubuk. A lot of you, 52% of you on YouTube also said bearish. Which way is it going to go? I'm seeing green. I'm seeing a little bit of green. The fill was at 25.6, attempting to get out at 27. And, ooh, that's not the right color. For me, green right now is red. So we got to keep that in mind. For me right now, green is red. All right, let me move this over here. Let me move that. Let's resize some of this good stuff over here. All right, just resizing the book map, basically to see how screwed I either am or am not. Anyway, as we're waiting to see if this does play out, or if you guys are going to cost me money. Well, that's not a good way to do it. The whole situation is like, I don't know. I have, I guess, a lot of thoughts going through my mind with this whole Apex Brian Stong thing. So on one side, when I first get the email, my anxiety spikes because I'm like, okay, they're coming after any trader or influencer who has any blemish on their record at all. And I've been obviously very, very forthcoming about the fact that I broke the MAE rule. But obviously, that's just like the little anxiety in your head because that's all I did. Like I wasn't gaming the system. I traded all the accounts together. It was an honest mistake. I learned what the rule was and I traded better from there. And in fact, it wasn't just me gaming the system, quote unquote, in 1 week. I had 73 trading days and there were only 2 of those days that I broke the MAE. And it's like, okay, like then I just learned a better way to avoid it. And then I never broke it from there on out. So it's one of those things that like, because something so large and like whatever, that guy got blown out and he was gaming the system and they caught him and it's all done. Like the business relationship is done. I'm sure he's done trading on the platform. He's probably fully banned and blah, 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 blah. It's like one of those things. So right away in your own mind, just because like you're waiting, like your anxiety does spike, like for sure. If I'm like just being honest about it, like you sit there and you're like, Jesus, like, okay, like, so I know it's one of those things that logically I'm still good because I know that I traded. I know that I followed the rules. I know I had a couple soft breaches, but I fixed that issue. And then from there on out, I didn't have any of those issues. So, okay, interesting. And then, but still because it happens, like that doesn't stop the anxiety. So that part makes me not feel so good. But then I think about it. I'm like, okay, well, hang on. Maybe in a certain sense, this is actually fine. And maybe this is a better sign for me. Maybe it's one of those weird things where no news is good news, because if Apex is going scorched earth on traders and influencers who are gaming the system, especially ones with the following, I feel like if they thought I was doing that, I would have been included in this drama. So I went from like a super high anxiety feeling about the whole situation to actually thinking about it a little bit more and being like, well, hang on, no. Like I probably would have been involved if they thought I was actually doing this. So, and then that was like one extreme. And then I came back into the middle, like many things in life where the truth is somewhere in the middle. And I realized that they probably haven't even looked into my case. So at first I thought it was legitimately bad news. Then I thought it was legitimately good news. And as of this morning, I'm actually just settling in the middle and realizing, you know what? They probably have been so busy with all this other stuff going on that it probably does not involve me. And like, I really wouldn't be so surprised if like somewhere at someone's desk in Apex, there's just like a little post-it note of like review Matt Kohrs, and they just haven't gotten to it because I don't think that the risk department is like hundreds and hundreds of people. Their risk department was probably super, super busy going back and forth with the leadership of Apex, trying to figure out this craziness with Brian Stonk. So it's one of those things that I think sometimes it's really easy to see reality through your own, like, kind of selfish, ego-driven, hubris-driven lens where you think everything in the world's about you. And then if you actually take a second to think about it, you're probably more like, actually, this might not involve me at all. So as of now, like I said, I went from negative to positive, and now I'm just sitting in neutral. And it's one of those things, like many times in the market, when you just have to have some patience, it feels like I just have to have patience in this situation as well. So that's where I'm at. Wow, look at this pop. Gold getting the upside, I was looking at silver and then I was looking at gold, which are the biggest gainers on my watch list. But anyway, the Nasdaq getting the upside gap fill and pumping all the way to the closing value and actually ripping all the way to VWAP. All the way to VWAP. So, what a people buying the dip there. Okay, so we're trading 12 accounts. I have like one little pre-market trade. What are we? What happened to the Vanquish one? I'll let you guys guess. You blew it out because the market never came back. All precious metals are suspended on Apex. Yeah, probably part of the reason that people were gaming the system with it. And they're like, okay, if so many, like, it's one of those things where a couple bad apples ruins the game for everyone else. So, and Apex isn't the only one. Many prop firms have suspended the trading of gold and silver. And it's because probably so many people were attempting to hedge out accounts and expect big winners on some and big losers on others. I'm not so surprised now with the information that we have. I'm not so surprised seeing what we are seeing, but I don't know. I have a feeling that the story is not over. If I had to guess, I have a feeling that we're going to be getting more information and more details and more updates. According to Brian Stonk, he has retained a lawyer to look into this situation. If everything he's being accused of from Apex is true, it's really, really tough to think that his lawyer, wow, look at that. Silver's going crazy. Be careful if you're trading silver. It's hard to believe, truly, it's hard to believe that a lawyer would be able to do anything, because if you're clearly violating rules, you're clearly violating rules. If any of us were running a SIM-funded firm and someone was perpetually violating rules, like, would you give them a payout, no less a max payout? Wouldn't you just give them at best just like that one little payout cycle? But like, I don't know. The whole thing is crazy. Matt is going to get $1 million and lose 56% of it to New York. No, I'll be losing 50% of it to Pennsylvania. Different state will be getting my money. A different state. What time is it? 9:38. Do I want to take this Orbo trade? That's the real question right now is, does your boy want to take the 10-minute Orbo breakout? Orbo is the opening range. The question is, can I do it with minimal risk? Like I said, I have my ATM strategy set up. These are nice because they can auto set up your profit and your risk. Easiest way to avoid the MAE rule. Hey, I know it's a pain in the ass rule, as in like it's easy to violate and whatever. Like, it's a little bit of confusion of what it is, because it kind of sounds like a daily loss limit, but it's not actually a daily loss limit. Hey, I completely understand. And I'm telling you, the easiest way to protect yourself from making that mistake is to set up an ATM strategy. Just do a little bit of reverse engineering on what your risk should be set to. And then, hey, you just know that's your extreme risk. And just, if it gets clicked, if it gets hit, it gets hit, but at least it stops you from that soft violation. So I promise you, the easiest way to do it is there. You earn the money in New York, they get the tax, not the state that take the payment in. No, that's not true, because technically I haven't earned it yet because I haven't gotten the payment. That's 100% inaccurate. I have a sneaky suspicion I've looked a lot more into the tax ramifications than you have in this particular issue. But no, it's not retroactive like that, just because some of the trading, I do want to, all right, we're going to take a stab at it. Submitted. And we're moving our wrist right up to this level. That would be basically the same as saying, no, but some of the trading was done in the year 2025. So now you have to go back and change your taxes for 2025. What matters, because you're paid as a contractor. That's actually the big difference there, is how you're paid. And this isn't paid in terms of capital gains because it's SIMDA funded. You're paid as a contractor. So what matters as a contractor is obviously, like you said, where you're working as a contractor, which, like, once again, this is just my legal situation in the US. If you're internationally, I'm not commenting on your situation. In fact, I'm not commenting on anyone's taxable situation. I'm just commenting on my own. So my business is paid as a contractor. So what matters is that payment and the year and the location for that. So are there better places for it? Without a doubt, dude. If I was in somewhere like Puerto Rico, Florida, those are probably the two best ones. Other good ones are Tennessee, Washington State, I think New Hampshire, maybe South Dakota is another no income tax. So those, I think there's 6 or 7 no income tax, but then Puerto Rico is probably the most popular because there's no income tax and also there's no capital gains. Nevada's another one. Yeah. Is your trade betting on market going up or down? I am long on NQ, so bullish. I'm long on the NASDAQ. And what did I do? I waited for the pump. It recaptured VWAP right here. I got in. My stop was the swing low. And honestly, if we take out 892, the current intraday high, I'll move my stop to break even. Honestly, part of me wants to just do it right now because then I have a riskless trade. But I need to give it a little bit of room to run. What I'm trying to play is the 10-minute Orbo breakout. It's a very basic trade, and I'm trying to pair that up with my Icarus trading system. But I'm being hesitant about it. Oh, here we go. This might be the move for me. Stop to break even. It's a freebie trade. See, right there. I'm taking all risk off the table. I started with my risk knowing where my max risk was. Right away, I lessened that by moving it up to the swing. And then as it went in my favor, stop to break even. Bing, bong, boom, folks. We do not need to overcomplicate this stuff. What are you trading? This is NASDAQ, but it's the futures contract for NASDAQ. So the NASDAQ, the actual index is NDX right here. This is the actual NASDAQ, NDX. And then the ETF that tracks the NASDAQ is QQQ. So this is an ETF. And there are other ones. This is probably just the most popular. And then there's also a futures contract for it, which is the NQ symbol. So they're all the NASDAQ. They're just kind of different variants of it. NDX is the actual NASDAQ. QQQ is an ETF that tracks the NASDAQ. And then NQ is a futures contract that tracks the NASDAQ. So they're all the NASDAQ, just, I suppose, different derivative products, different assets tracking that same thing. Oh, brother. But I do need to pay attention. So the current high is 949. Bookmap 900. I'm worried about it breaking below. So my stop's at break even. So no matter what, I'm fine. I'm not losing money on this trade. The question left over is how much money am I making? And I'm worried about this touch of 900. It's one thing if it touches it and bounces, but if it touches and fails at such a key psychological level, obviously I have to get out. It's just brutal because this is a 50-point swing. And right now my FFN accounts do have unrealized drawdown. So that's $1,000 less of buffer, which, like I said, is a wee bit of a bummer. Come on, I just need it to hold 900. And that is currently the point of control. So I'm looking for this to base here. And then I would love to move my stop up to that level and then just basically guarantee myself at least 40 points, which would be $800, which would guarantee my realized gain to be at least $1,000. But here's the first real test for me. All right, I do need to mark out the extremes. These are always very useful to know. I am paying attention to 24,959, and I'm also paying attention to 24,985. That is yesterday's high and then the overnight session high. So I care a lot about this zone between 60 and 85. So that I'm expecting a clear market reaction to those levels. And there's nothing big brain about it. I don't have some fancy schmancy model to sell you, to pitch to you as some sort of ultimate prediction tool. It's literally saying, hey, those are recent highs. Can you try to target those recent highs? Getting in with minimal risk. Why did I get in? Well, I got in because we recaptured the volume weighted average price, the VWAP, which a lot of traders are now reacting to. We pumped above it. We pulled back. We started to go. I took that long. I got my stop up to break even. The initial trade didn't have much risk anyway. I was protected by the ATM risk. I moved it up to take less risk. As the market went, I got all risk off the table. And now I just, like I said, I'm watching this zone right here between 60 and 85. This is the high from yesterday, the first blue one. The second blue one is the high from the overnight session. And then obviously 25,000 is just a very important like psychological level. I mean, it's 25,000. So not so crazy to think that maybe people just have a lot of sitting targets there. And I could show you the action that's going on right here. Shout out to Bookmap. You can see a lot of people are trying to sell at 950. So that deep red zone, that's just a lot of sitting sell orders. And we just tagged it a little bit, got a little bit rejected, but it's literally the current intraday high, which is probably also the 15-minute Orbo, which if I switch it over right here, see the first 15-minute bar, the Orbo just mark out the high and the low, and the breakout would literally be the intraday high. Let me make that blue. Okay, 15-minute Orbo just broke to the north side, just barely, but it did break, and we are running into a little bit of right there. We're battling it out. You can see all that selling going on. You can see all that selling going on. Okay. All right. I'm moving my stop up to 98. All right, so no matter what, I'm making $1,000 on this. I already made 200. So worst case scenario, the absolute worst case scenario is I'm making 1.2K on all these accounts. I have 12 accounts, so that's about $15,000 is the worst case. And I need to drive this point home. And I know I sound like I'm a broken record, beating a dead horse, whatever fucking saying you want. But at the end of the day, it all just comes down to your risk management. It really, really does. You are in control of your risk. You're not in control of your profits unless you're a mystical, magical Harry Potter folk who can wave a magic wand and make things happen that shouldn't be happening. If you're a mere mortal like me, well, I'm not a mere mortal. Look at my hair. My hair is amazing. But if you're a mere mortal with amazing hair, you're just in control of your risk. You are. I might get stopped out here. It might be targeting 900. That's a very fair thing. And if it goes, whatever, I'll be happy that I got out. If it bounces back, guess what? I could always get back in. There's no pattern day trading in this. There's no pattern day trading in the world of futures, especially when you're talking about SIMDA-funded futures. So sometimes does it suck to get knocked out, especially if you have a slightly worse fill when you have to get back in? Yeah, it sucks. But you know what sucks more than that? Is you have a nice trade where you're up 1.5K and it pukes and it goes all the way down. And it's one thing to get out at break even, at least you protected yourself, but to be in situations like this and then somehow go red on the trade, that's where it sucks. I like that. You can control your risk, not your profit. Oh, that's the major mindset of all profitable traders I know. Like, think about it. It's true. That's not some big brain statement. Maybe it's never been articulated to you in that way, but as a trader, one of the biggest jumps I've ever made in my trading career, and like, once again, this is not big brain. I'm not trying to pitch this as like, wow, look at what I came up with that no one's ever thought of before. You have to bring from your subconscious to your conscious mind what is known and what is unknown. What are the controlled variables? What are the uncontrolled variables? The game of trading has a lot of variance. For example, if you're playing something like tic-tac-toe, checkers, or chess, all information is known. There is no hidden information. All the pieces are on the board and everyone playing the game has all information. If you look at something like poker, if you look at something like trading, there's a lot of unknowns. When you have a system, basically a math system that has more unknowns, you're most likely going to have greater variance because they're right there, tagged out. That sucks. But does it suck? Because I also did just lock in $12,000. And guess what? If this goes, if it breaks down and retouches VWAP, I'm going to feel like I made the best move ever. And then if it bounces from here, I could always get back in. And guess what? I'll do the same thing. I'm going to risk the recent low. And if it goes, great. I'm going to get the stop to break even. And I'm always attempting to go fishing. That's my mindset on trading, is I'm always attempting to go fishing. And For all of you who have fished before, you know the best way to be a fisherman is to keep your bait costs low. Keep your initial risk as low as feasible, and then just go from there. That's how you do it. But anyway, back to this conversation about variance. The biggest jump I've ever made as a trader is bringing from my subconscious mind all the things that like are known and like in my control versus not to my conscious mind, and always reminding myself of that. And this is one of those examples. You are in control of your risk. That is 100% up to you. No matter what anyone says, the risk is you. Like, you get to decide your risk. That is one factor, one variable that is 100% in your control. Profit is not. Trend is not. You don't know what other traders are going to do. You don't know points of breakouts, breakdowns, fake out breakdowns. You're not in control of news. You don't know what the PCE report's going to be, the GDP. Yeah, you can come up with your best assumptions. And when you have a trade, you could always try to be like hopeful and hope that something either does work for you or maybe doesn't work for someone else. But regardless, that is an unknown. Like, it is just not for you to control that. It's impossible for you to control that. So inherently, that means your profits are out of your control. Of course, you can put profit targets in, but you can't make price go there. What you can do is you can definitively know what your max risk is going to be. And from all of the biographies, autobiographies, and stories that I've heard of very massive, profitable, massively successful traders, that is one thing that I see time and time again. There's no trader you're going to find that has success that doesn't say something along the lines of, you have to become borderline obsessed with your risk. When I say borderline obsessed with your risk control, I mean actually full on cuckoo crazy asylum. Like, you're just in there, you're in a white jacket every day and you're like, I can't take on more risk. I gotta lower my risk. That's too much risk. Like, if you're not cuckoo bananas, like in a fucking white jacket, just going on about risk, if you're not driving down the highway and your wife says something, hey, we should go to Wendy's tonight for dinner, we should go to Taco Bell, and you're like, nope, that's too much risk, I might blow out my pants in the restaurant. If you're just not thinking about risk day in and day out, you might not be at the risk obsession and paranoia that you actually need to have. Like, get yourself to that level, folks. I want you guys to be tagging me in your asylum straitjackets and just murmuring, that's too much risk. Oh, that's not enough risk. Oh, my risk sizing's off. Like, that's it. If 50% of your spoken words per day are not the word risk, if your favorite board game is not risk, what are you doing here? What are you doing here? Everything should be about risk, day in, day out. And that's what you're going to have to do to actually get good at this game. As someone with IBS, I'm always afraid of my risk of shitting myself. See, you're Buzz Lightyear. I'm sorry you have IBS, but at least you're doing what you need to be doing. You're focusing on risk. Speaking of risk, speaking of which, do I want to take another trade here? Oh, what's happening at 900? What's happening at 900? We kind of pop back up. That is the point of control. VWAP's all the way down here at 50. So we have a 50-point awkward transition zone between VWAP and the point of control. Kind of an awkward thing. It is somewhat setting up like yesterday. See, am I happy with this exit? Yes. Could I have made more money? Yes, but I'm also not fucking clairvoyant. For all I know, this could have pulled back, double bottom, and we could have been ripping another 200 points. I don't know that it's going to break down here, like whatever. I saw, okay, we swept that low, All right, I'm going to get out. I took my profits. I did it right below a key level. I made 1.1K on 12 accounts. That's a good gain. That's about $13,000. And guess what? Was it the right play? It was the right play. But I could also show you this setup right here of where I got out. The blue arrows when I got in, the pink arrows where I got out. I could have shown you another one where it knocks me out. That sucks. And then the very next bar is a giant green bar and it just rips. That does happen. That's out of your control. I controlled my risk. It hit my risk. I moved on with my life. Was it the right move? Yes, but never judge the quality of your trades on was it optimal for money. Judge the quality of your trades on did you follow your system? Did you follow your decision making? I am not in control of this bar being red and it puking, which it did benefit me this time around to get out there, or it could have been green. I'm not in control of that. I'm in control of sticking to my system. I saw the VWAP bounce. I popped. It pulled back. I didn't like it sweeping 1, 2, 3 separate lows. I got out when it started to push. Okay, whatever. And guess what? It was the right move this time. I'm sure there's many examples of me making the wrong, quote unquote, wrong decision, as in it just keeps going and I left money on the table. It happens. Like, it really does. So that's just something you have to accept. And guess what? Futures, no pattern day trading. That's actually one of the things I love about trading futures. Actually, trading futures is legitimately my most favorite product to trade. There's no pattern day trading. There are, in my opinion, better trading hours. I like that it's Globex because you just get more filled out data sets. It trades 23 hours of the day, starting Sunday night, going all the way to Friday night. It does take off Saturday. So better trading hours. You have actually the data to buy data to do analysis on it. It's either very, very cheap or free. So more accessible data, better trading windows, in my opinion. And I also, there's no pattern day trading, which is awesome. And I also really, really like the fact that you can get domain expertise. I find that when people trade equities, at least this is what I did, and maybe this is not a problem for you. It's very easy to chase around the hot equity. And all of a sudden, you have to be an expert in gold mining. And then next week, you have to be an expert in trading AI. And then the next week, you have to be an expert in a fucking failing movie theater chain. And then you have to know a little bit about oil. It feels like you're continually running around trying to get domain expertise in things that have no correlation. Well, if you're trading futures, you literally might just trade the NQ contract. And then all of a sudden, you're just getting really good at trading that one specific thing. Same thing with ES. And people do that all the time with indices, whether it's SPX or SPY or QQQ or NDX. There's this idea of trading equities that you have to become an expert in all these penny stocks. And I didn't really like that. It felt like I was always like just chasing my tail and needed to learn about that, learn about everything. And I was always late to the trade because the trade did the move. The move is why it got on my radar. And then I had to learn about this company, learn about what's going on, learn about how it moves. And then all of a sudden I was trading futures and I was like, oh, no. I just have to get very good at this like one specific thing. And then that's where I can make money. But once again, obviously that's just my experience with it. Maybe you're a person who loves learning about all these companies. But for me, I have found that the world of trading is a mechanism that does not pay for broad knowledge. It pays for expertise. I would much rather be an expert in one specific equity or futures or whatever like I would rather be an expert in one thing and know how to make money off that one thing than just be like, I don't know, kind of losing money on a bunch of other things. Because if you have half-ass knowledge, even if you have good knowledge, but it's not expert knowledge, you're probably not going to be profitable elsewhere. Like you really, in my opinion, you really do have to have expert level knowledge to be profitable in this game. I don't know if I like that trend line, but like I said, I don't know what the fuck I'm talking about. Maybe I'm right. Maybe I'm wrong. Maybe I'm right, maybe I'm wrong. How do you draw a box on this? Drawing tools, rectangle, Control F12. Well, I don't like that really. I wish it had snappiness to it. If I do take this long, I specifically want to be in below 900, just because if it gets above that, it might serve as like a protection. There might be setting buy orders there. So if it does pop, I would love for my average to be below 900, because then it's easier to set my stop to break even. Pop, pullback. Is this getting... Are we going here?
Order submitted.
Fuck. I tried to get it below 900. It gave me a fill at 901. I should have just had a pending order at 90. Anyway, as we always... Whoa. What the fuck was that? Oh, it's 10. I thought we were past 10. Shit. Don't get away from me. That was my bad. I thought we'd been past 10 a.m. Yeah, no, I would not have taken a trade at 9:59 and 46. I thought we were pushing 10:30. What the fuck was that? Oops. Yeah, that's a ID 10T error. Well, here's to hoping it can hold. I did get my stop a little bit in control. I'm basically risking a little bit less than what I made on the day, but I do want to get my stop up to a better value. Do I just want to go to break even at this point? That was... Okay, we did take out 23. What is this? The intraday high is 57. Okay, if we push...
Order, target filled.
What the fuck was that? What in tarnation is going on, brother? Somehow made 2.5K per account. The market gods shine upon me. War declared. I don't know. All right. Anyway, made about 2.5K. I wish I was riding this. I wish, like, you guys, I don't really pay attention to my profit target. I care more about my risk. And I was like, go back and stream. I was wondering about where to move up my risk. And I was like, oh, maybe I'm going to move it up to 73. And then I actually heard the fill before I could even see that it got a fill over here. That's crazy. I would still love to be in this. I mean, I got a random fill at 76. I would have liked 25,000. That would have been an extra $500, and it just ripped to 25. That's crazy, dude. That's all right. So we're 2.5K on 12 accounts. So that's not a bad deal. What's that? 30,000, I want to say. Am I doing my mental math right? 2.5 times 12. I think I made 30,000. No. Why is my math so wrong? Am I right? What does... Claude, add this up for me. Don't make any mistakes. It is 30. It is 30. What's the news? We just had some data release at 10. Here, our boy Rick's probably talking about it.
Tariffs, the so-called IEPA, that is the International Emergency Economic Powers Act. The Supreme Court was deciding whether or not that law was appropriately applied to the president's authority to create tariffs that he did throughout
Trump's global tariffs struck down by U.S. Supreme Court. Holy shit.
Liberation Day. And
what
that massive change in geopolitical and trade relations that we saw around the world. This ruling is now in, and we are looking at it right now, Carl. It's 170 pages, so I'm going to take a moment and read it here before I tell you what it says. But we do have the ruling from the Supreme Court here on the president's tariffs and whether or not they are legal or not. And we're going to go through it line by line here momentarily.
This is
I have the
big
same decision
news.
in front of me, Eamon. This is going to be a dense read, and we're going to be very careful not to go with any news unless we have it absolutely cold. We'll give you a chance to go through it and talk in a few moments. Eamon Javers watching SCOTUS. In the meantime, we're going to have to weigh a bunch of other things. FT has a piece up in the last few minutes that Iran may be working on a proposal that might avert any kind of would-be military action in the Middle East. Did see a little spike here in the market as we got back above 68.60, which is roughly where we closed yesterday.
Right, we're digesting a weaker GDP. Market kind of brushing it off on the government shutdown because government spending declined double digits. So that was such a big part of the weaker GDP print and higher inflation print as well, especially core prices came in It a big jump. I mean, 3%. So you don't want to see the inflation moving in the wrong direction. I will note all that inflationary pressure came from services, most of it not necessarily from goods. So it wasn't necessarily a tariff story. It was more a services story. On this ruling,
I'll back you up there because the PMIs that we got a few moments
ago
did mention,
dude.
Here's S&P, average input costs rose sharply again in February, linked to...
Don't shit out on us now. No. Supreme Court strikes down Trump tariffs. Wow, dude. Folks, you're living through history.
Sharply again in February, linked to supplier price hikes, tariffs, and higher wages, feeding through to the largest increase in ASPs since August.
but if you look at where the number
Why is this CNBC keeps shitting out? Bloomberg TV has to be talking about it.
Actually, if you didn't join the lawsuit and then you had a decision like this, you wouldn't actually be in the
Holy
queue
cow.
preparing to potentially or even be legally allowed to get the rebate back in terms of the tariffs that these companies have been paying. So that is why you are seeing a lot of companies like Nike on your screen just shooting up right now, the stock. But it is important to take a step back and remember that tariffs are going to be here to stay for the Trump administration. They just will not be using IEEPA. It gives an incredible amount of flexibility to this administration to quickly put, honestly, tariffs on, tariffs off, basically overnight. They're going to have to go through potentially investigations, or they're going to have to use.
Wow, dude. Hang on. Let me see if I could get any other news.
Potentially only for a shorter amount of time, or have certain limits to them. So there now will be limits on this administration, but they're going to get to similar tariff rates when it comes to countries that have done deals, and also broadly, when it comes to the fentanyl tariffs, they're going to have to use other avenues. But this is a big blow for the administration that has really used IEEPA the entire year to enact their entire trade policy.
And that's all of that is so important to keep in mind, Anne-Marie, when we look at this market reaction. How much of it will last? Do you start to get an unwind of anything we've seen, given the ability, as you've been describing, to enact tariffs in other ways? Joining us now, also around the table, is Bloomberg Wall Street Week host David Weston. David, I know you've also been.
It looks like CNBC is having issues.
Yeah, for
as much
6
as you
minutes.
can.
Yeah, that's right.
All right, give us your 6-minute take. What's your initial take on what we've seen?
Back at the Supreme Court, we had more than 6 minutes to actually read through
This
these
is the
things.
modern day era, David. Only 6 minutes you get.
One simple point, from inside the court, you can understand.
Since August.
But if you look at where the number,
like the GDP number.
Let's get to Eamon Javers in D.C. Hey, Eamon.
That's right. The Supreme Court has just issued a ruling here on the president's tariffs, the so-called IEEPA. That is the International Emergency Economic Powers Act. The Supreme Court was deciding whether or not that law was appropriately applied to the president's authority to create tariffs that he did throughout 2025. Now, this applies
Supreme
to
Court
all the
rules
president's tariffs
6-3 against Trump on tariffs. 6-3, so it wasn't even necessarily close.
And that massive change in geopolitical and trade
that means
relations
even
that we saw around the world. This ruling
conservative-leaning Supreme Courts went against them. It was 6-3.
It's 170 pages, so I'm going to take a moment and read it here before I tell you what it says. But we do have the ruling from the Supreme Court here on the president's tariffs and whether or not they are legal or not. And we're going to go through it line by line here momentarily.
I have the same decision in front of me, Eamon. This is going to be a dense read, and we're going to be very careful not to go with any news unless we have it absolutely cold. We'll give you a chance to go through it and talk in a few moments. Eamon Javers watching SCOTUS. In the meantime, we're going to have to weigh a bunch of other things. FT has a piece up in the last few minutes that Iran may be working on a proposal that might avert any kind of would-be military action in the Middle East. Did see a little spike here in the market as we got back above 68.60, which is roughly where we closed yesterday.
right, we're digesting a weaker GDP. Market kind of brushing it off on the government shutdown because government spending declined double digits. So that was such a big part of the weaker GDP print and higher inflation print as well, especially core prices came in It had a big jump. I mean, 3%. So you don't want to see the inflation moving in the wrong direction. I will note all that inflationary pressure came from services, most of it not necessarily from goods. So it wasn't necessarily a tariff story. It was more a services story. On this ruling,
I'll back you up there because the PMIs that we got a few moments ago did mention, here's S&P, average input costs rose sharply again in February, linked to supplier price hikes, tariffs, and higher wages, feeding through to the largest increase in ASPs since August.
But if you look at where the number...
Dude, they are just shitting out on CNBC. They're having clear issues.
Here's S&P. Average input costs rose sharply again in February, linked to supplier price hikes, tariffs, and higher wages, feeding through to the largest increase in ASPs since August.
But if you look at where the number...
Order submitted.
Look through the decision and maybe get us a count as well, Eamon.
Yeah, Carl, that's right. The Supreme Court has now ruled against the President of the United States on this issue of whether his tariffs of 2025 were legal or not. Here's the key sentence from the ruling. The Supreme Court says the judgment of the United States Court of Appeals for the Federal Circuit, that is the lower court in this case, is affirmed. Now, remember, the lower court said that IEEPA, the law here in question, does not allow the president to unilaterally impose, revoke, pause, reinstate, and adjust tariffs to reorder the global economy. So the lower court said that the law here in question did not give the president that authority. And what we see here is the Supreme Court is upholding that lower court ruling. And I'm going to just find here another sentence, which is, I think, the key to the court's analysis here. And what they're saying is, based on two words separated by 16 other words
Supreme
in Section
Court does not
1702A
address eligibility
of IEEPA,
for tariff-free
the words
funds.
regulate and importation. The president asserts the independent power to impose tariffs on imports from any country of any product at any rate for any amount of time. Those words, the Supreme Court says, cannot bear such weight. So what the Supreme Court appears to have decided here, guys, is that ultimately the IEEPA statute was about regulation of imports, not about tariffing of imports. And if Congress had intended for it to be about tariffing of imports, it would have said so explicitly. And because it did not, therefore, the president does not have the power to interpret this law in such a broad way as he did. Now, what is the impact of this? Immediately, this is going to set off the food fight of all food fights in terms of how companies that paid those tariffs last year get reimbursed. The president of the United States has said that the U.S. government will in some way have to reimburse those tariffs, but the cost is so high to the Treasury. The president has suggested that the U.S. government may not be able to do that. So what kind of a situation are we going to have for companies that are trying to get reimbursed this year? That's going to be a fascinating fight. Whether or not the government tries to slow walk that or find some loophole or carve out, we'll see deeper down in this decision by the Supreme Court if they've given any guidance as to how that process should work. We don't have that right now. That might be material for a number of these companies, guys. So as we look through this, what we're seeing here is a striking decision by the Supreme Court against the President of the United States. We're also seeing here a lengthy dissent here from Justice Kavanaugh. So we'll get into his logic on why he's dissenting as we dive deeper.
Mag 7 picking up. SPX
going with a 6-3 vote?
Yeah, I don't have the vote here in front of me, Carl. We're still looking at the actual language of the decision. So it looks like I'm being given here by our fantastic producer. Yes, 6-3 decision. So as I was reading that, we've been able to pin this down. So yes, 6-3 decision. So that is not the 9-0 decision that we've been talking about, even on Squawk Box this morning, the possibility of having a 9-0 unanimous decision. This is a divided court, a 6-3 decision here ultimately. And we'll wait for the president's reaction. The president has said this is one of the most important decisions the Supreme Court will ever render.
He has to be getting ready to pop off on
because it gives him
Truth
unilateral
Social,
negotiating power, the leverage that unbridled tariff authority gives the president of the United States in terms of negotiating with countries around the world is enormous.
Yeah, he hasn't
the president
said anything
has
about it
enjoyed
yet
that
on Truth
leverage
Social.
in order to force countries to the negotiating table. The president has said if he loses this case, that will rob him of that leverage and deprive him of the ability to help the U.S. Government in all of the negotiations that it has everywhere around the world.
Oh, it got really close.
I would expect a blistering statement on Truth Social here at some point shortly.
Thomas, Kavanaugh, and Alito were in dissent here, but importantly, Gorsuch, Barrett, and Roberts, obviously.
I almost got stopped out. My stop's at 927.
Eamon, you know, backing up a bit, I mean, it does simply seem that the Supreme Court has reaffirmed that the Constitution gives Congress the right to levy taxes and tariffs and not the president, correct?
Yeah, that's exactly right. And the Congress would have the authority.
I don't mind the trade. I actually would take that trade all the time.
To the president of the United States, if they wanted
to. It was all bullish.
And what
I'm
the
looking
president
at the Mag
did
7,
by looking at this IEPA law, remember,
I don't mind that
that's the law,
trade
the
at all.
International Emergency Economic Powers Act, that the president cited as giving him the authority to impose these tariffs on Liberation Day in the first place.
I tried playing this breakout. I would take that trade 10 out of 10 times.
Farther than it had ever been stretched before by saying that this power to regulate international commerce also includes the power to tax it. And taxing power, of course, under the Constitution belongs to Congress. Now, they could send some of that power down Pennsylvania Avenue to the president if they wanted to. And what the Supreme Court is saying here is, well, they didn't do that in this law. The president is arguing that they did, but they certainly didn't. And if Congress had wanted to do that, they would have done it in a very explicit way that it wouldn't require a tortured reading of the statute to come up with this interpretation. It would just say it in its plain face in the law, and that's not what happened here. So this is a huge reversal for the Trump administration. The administration, we should say, has suggested that if they
Trump to
lost
respond
this
on
case,
Truth Social.
they would
You
have
know
a
he's
number
gonna
of
pop
other
off.
authorities, and they would be able to convert their tariffs to these other authorities in
little
relatively
VWAP
short
retest
order.
here.
What are some of those authorities? Section 338, Section 232, Section 301, Section 122, all sorts of other authorities that the U.S. the executive branch would have to impose tariffs are in play
right at
here.
VWAP again.
But all of them require
maybe we bounce,
some
maybe
sort
we
of
don't.
lengthier process, and they don't give the immediacy that the president has really enjoyed using this novel interpretation of IEPA, which has now been struck down. You have to go through an investigation. You have to have a report and a finding. All of that takes a certain time on the clock in terms of the calendar. That doesn't give the president the unilateral, immediate.
All right, we're at the bottom end of this cloud. It might be switching. I don't know yet. That's what I'm really watching
all
for.
year long. This is going to be deeply, deeply frustrating
We
for
were
the president
bullish,
of the United States.
but this is pulling back
And just to
enough
put a
now.
number on how
We're
much
back
we're
at
talking
neutral,
about,
and you just have to
according
wait.
to estimates out there, $133.5 billion of tariff revenue has been collected under IEPA specifically in fiscal year 25 and fiscal year 26 through December 14th. It's according to Cato and some of the estimates. So $133.5 billion. The question is going to be on the potential implications now about whether that gets returned and to who and how that,
The 5,
how that all
10,
plays
and
out.
30 are trying to hold.
That's why I say it's
Okay.
going to be a huge. It's going to be a huge food fight in terms of how that money gets distributed and who it gets distributed to. 133 billion is our best guess, Sarah. You're right.
Yeah.
That is the current number. It's probably higher than that. We just don't have the latest numbers in yet. But remember, it's not all of the tariff revenue that the administration has collected. 293 billion have been collected overall in the president's second term now. So a big, big chunk of the president's tariff revenue, but not all of it, is now being struck down by the Supreme Court here.
I just wanted to, the market reaction is sort of interesting and worth discussing, Mike, because the retailers are actually gaining on this. They're the ones who have paid the highest tariffs because they manufacture all their product overseas. It's notable because we sort of expected this to go this way. The oral arguments, I think, on November 5th seemed to suggest that a majority of the justices were skeptical about this.
Yeah.
And the Poly
if
Market
you looked
and
at
Kalshi
Kalshi and Poly Market, they were very confident in this getting struck down. It's not a surprise that it's going this way.
It's not out of the blue. The response
it's just kind of
does seem
shocking
more
that
narrowly
it came out of
focused and
seemingly
kind of
nowhere.
isolated to perhaps the biggest beneficiaries if the tariffs go away. I did also note some of the non-U.S. ETFs bounced huge, like the India ETF goes vertical. Okay, all this idea that maybe there'll be a little bit of relief. I mean, the one thing that's hard to calculate is investors had talked themselves into coming into this year. We were anniversarying the tariffs. That's a receding factor in the investment equation at this point. And let's have a clean policy year when we don't have to worry about whether we, or give or take on.
All right,
on
stops
tariffs. I'm
to
not
break
saying it's
even
gonna
on
be
this
taken as a
trade.
negative, but I do think that it raises uncertainty on policy, even if it's in a positive direction. For some companies.
Well, two things. One is prices aren't set automatically when a tariff is instituted.
Right,
so turn to the calendar page, that's reflected in a lot of the PMIs today.
I just had to do that in case it's a hard rejection off 25,000.
The money's fungible. They're raising billions
it's coming for me and it's coming quick.
Returning it to. If 90% of the
50-point dump. We are moving big ranges very quickly. Be super careful about your risk today. That's a 50-point dump like it's
nothing. I know it's a
nothing.
controversial statement. Obviously, Kevin Hassett disagrees with it, but my point is, where's the money going to go?
There are companies like Costco that have sued to collect the money.
There are customs documents that say who actually cut the check.
And so that's
who gets it back. What they do with it, I guess we'll have to see.
Seems like there's
question. What do you do with it?
A lot more questions
You're
now than
suggesting a giant
answers.
class action on behalf of American consumers?
Yeah, I'm suggesting everything's free at Costco for a week.
Market's reaction is interesting.
But the
it's
administration
seemingly
claims
all
that a
over
lot
the
of it
place.
has been borne by foreign suppliers to fight for market share. If that's the case, first of all, you kind of have to prove that. Right. And do they get it returned? You know, that's the question.
Yeah. Also, what it does to other countries now and their calculus on negotiating overall trade with America.
Right.
SPX got hit. Mag 7 is stronger.
Bilateral deals.
NASDAQ popping is going flat. It's all over the
Director of the
map.
National Security Institute at the Anthony Scalia Law School at George Mason. He's also on the board of directors for the Greater Washington Board of Trade, has served in the Justice Department's Office of Legal Policy. It's good to have you. Thanks so much for the help today. We need it.
Yeah, I'm curious what a professional's breakdown
What
is.
is your overall reaction to the decision?
I mean, it was
a
expected.
very clear rebuke of the Trump administration's effort to impose tariffs in this way through the International Economic Emergency
just saying
Powers
that's
Act.
not
as you guys were
the
talking
act
about
that
earlier,
you can use.
obviously the president has a lot of authorities he could be using. He's chosen not to use them thus far. But at this point, he's going to have to go to those authorities and not rely on IEPA. The court came out pretty clearly, 6-3. Justices Gorsuch and Barrett joining Justice Roberts' opinion. Justice Gorsuch writing separately to explain exactly why he joined that opinion in full. But he took on a couple of other ideas in some of the other opinions, as well as the dissents, strident dissent from Justice Kavanaugh and Justice Thomas as well. So a lot to sort out here, but a very clear rebuke of the Trump administration's effort in this way.
Right. I'm just looking through the majority here. The government cannot identify any statute in which the power to regulate includes the power to tax. The court is therefore skeptical that in IEPA and IEPA alone, Congress hid a delegation of its birthright power to tax. Does that framework, how do you think that's going to be received by the legal community?
Well, I think that's probably right. I mean, look, when Congress decides to delegate a power, it has to be clear. The court's engaged in a number of decisions in recent years to make clear that if Congress is going to delegate authority, particularly broad grants of authority with no bounds around them, as the president would read IEPA in this case, it's got to do so with real clarity. It's this whole idea, this major questions doctrine that you've heard a lot of talk about. And so the court's reiterated that a number of times. That didn't used to be the court's view. It is the court's view now. And I think that's where the legal community is going to say, look, we can see this coming from these recent cases, limiting the ability of Congress to delegate its authority and making sure that if it does so, it does so in a very clear, specific way.
I mean, the administration has been prepared for this, right? It didn't come in the first few weeks of the decisions.
Yeah, Trump does have multiple things that he could use to keep this going, I think, for like 150 days.
Which is sort of one of the easiest existing
It's not like it turns off overnight.
That he could use for tariffs. There's also Section 122 of the Trade Act of 1974, where he can do 15% tariffs quickly, but only for a 6-month period. There's Section 338 of the Tariff Act, which allows up to 50% tariffs, but it's never been invoked. Section 301 of the Trade Act. I mean, this is kind of technical stuff, but there are other means for him to impose these tariffs, aren't there?
Yes.
No, that's exactly right. And so, some of your viewers might be wondering, well, why didn't the president just go ahead and impose those up front? One, taking the view that they had of IEPA, I think they were thinking a couple of things. One, they could impose broad tariffs, move them around as they chose to.
25,000 here to hold.
Because Congress didn't put any bounds on this in theoretical authority in IEPA. They simply said the power to regulate imports. And so as a result, the president said, well, I can tax those imports, I can impose tariffs. That's a form of regulation. Now I've got complete free run room. I don't have to make any findings. I don't have to make any decisions other than there's an emergency going on, and this is my chosen way of solving for it. With all these other statutes, to your point, there are limitations. You have to make certain findings. You have to submit to Congress. You can only do it for a certain period of time. So it just makes it difficult. And so the president's, I think, theory was, if I can get this through IEPA, I've got broad authority. I can keep moving them around. If I make deals, I can reduce them as necessary. And so I think that's the idea here. Now they're going to have to go through. They probably do. If the administration was planning ahead, which I think I'm sure they did, they probably got a plan for how they will re-implement a number of these through these new authorities. They'll just have to go through the process of doing that. They probably have a break the glass plan ready to go, and they'll deploy it in the next hours, days, weeks.
Yeah, I think we'll be finding out something pretty soon.
What do you make of, I mean, from a legal perspective, the whole idea that we were just talking about before you came on of these refunds? I would assume the courts will be involved here as well in some fashion. It's very much unclear to any of us exactly how that would work. Do you have any ideas, Jamil, in terms of what at least a sequence of events may occur as a result of that?
You know, I mean, this is exactly the right question to be asking. I think the question the administration tried to raise is saying, look, the court shouldn't make the mistake of doing this. It's going to be a huge debacle to have to get these refunds back to people. And yet now we're in that position. The court did not take up that idea that simply because it would be hard, the court can make a decision on the law that it doesn't think is correct. And so the administration, again, hopefully has been preparing for this day, has a plan now how to do it. But what will ultimately happen, I think, is it'll go down to the lower courts. The lower courts will then have to handle this one specific case that's before them and provide the refund in that case. And then the question is, will the administration create a mechanism for all other similar situated plaintiffs? Will they wait for the court to come in and impose a requirement like that in some sort of a broader
25,000,
or people have to sue individually to get their money back? And it's open season right now. We don't know for sure. And I think that in part was why the administration was saying, you're going to cause a whole lot of trouble if you do this. And the court, I think rightly, said, look, we're going to do the law. You all figure out the consequences.
Yeah, that's there was so much sort of parlor gaming around I suppose a delay, the length of the time. We thought we were going to get this decision, some thought November or December. And per our earlier discussion, Jamil, about restitution.
Got myself back into the green,
how
but
do you
Jesus.
think we should think about the lack of consumer restitution? This is going to be a corporate restitution story.
Well, that's the really interesting situation. Obviously, the president has made the argument that, in fact, the economy is doing better, that the economy is expanding, and that the tariffs have actually been paid by other countries. That's, I think, a debated proposition. The Fed came out with some numbers earlier this week that suggested that wasn't as true. We had seen some earlier numbers, by the way, that did suggest that consumer prices had not gone up as much as we had thought. So the answer to that question about how much consumers have paid is a little ambiguous. Although I think the general economic consensus is that ultimately, whether it's today, tomorrow, or next year, consumers will pay the price of those tariffs. And so now, because the companies are going to get reimbursed, the one party that's out on these tariffs will be ultimately the American consumer. So whatever higher prices we did pay, we won't see that back. The president may have to scramble now, particularly as we're in the lead up to a midterm election. He may try to go to Congress and say, look, let's give the American people a tax refund of some sort in order to address this concern. But that will require an admission that American people have paid higher prices. He hasn't been willing to say that yet thus far.
Jamil, do you think this has any implication or bearing on the trade deals that have been negotiated under this whole tariff framework?
Well, I don't think so, because, the countries have come to the table. They've made deals with the United States. They've made agreements. Those agreements are as binding as anything else. They're executive agreements. They're not like they're treaties. But the countries could bail out on them. I think they would do that at their peril, because you'll see the president use other authorities to come in and levy, sort of punishment upon those countries if they walk out. So the deals are still in place. They may now not, the countries that haven't made deals, or the countries that have made deals and they see another tariff in the future,
caught up in a fake out breakout.
They may look, questioning at that. But the president has a number of authorities, as we were discussing earlier, as you raised. And so, look, at the end of the day, he's got a lot of tools in his toolkit. He just chose one that was very broad. He now doesn't have that one taken away. And now we're going to see what happens.
This guy's basically insinuating he has a lot of options
pressure on other
available to
countries
him.
to do trade deals beyond just tariffs. He's chosen that one because it was effective and it did the job.
Shit.
Yeah, although implementing those alternative tools is going to introduce some, perhaps more volatility into trade policy and certainly the markets. We'll see what that brings us.
I got knocked
Jamil,
out
thank you for the
it
help
to
on
pop
that,
to get me knocked back in. I'm
the wake
getting
of that
chopped
decision,
up right
which is
now.
only about half an hour old. In fact, let's get back to Eamon Javers, talk more about what you might have been reading. Eamon?
Yeah, Carl, I want to just give you Brett Kavanaugh's dissent here. It's a 63-page dissent.
All these lows
page
to pop
numbers
to a high.
Indication of intensity. Brett Kavanaugh feels very intensely about this. And what he's arguing is that the Supreme Court is wrong to have done this. Now, he's on the losing side of this vote, so it doesn't matter. But here's his argument ultimately. He says, the sole legal question here is whether under IEEPA tariffs are a means to regulate importation. Statutory text, history, and precedent demonstrate that the answer is clearly yes, writes Kavanaugh. Like quotas and embargoes, tariffs are a traditional and common tool to regulate importation. So if Kavanaugh had the votes on the court, he would have said that this statute does authorize the president to enact those tariffs. He also raises two possible downstream negative effects that you guys have been talking about. One is this question about refunds. What Kavanaugh says on page 63 here of his dissent is the court is saying nothing today about whether and if so how the government should go about returning the billions of dollars that it has collected from importers. But that process is likely to be a mess, as was acknowledged at oral argument. So that question about what happens to this, to the refunds, is not really being addressed by the court. That's going to have to get kicked back to the executive branch for them to figure out, and it is likely to be a mess.
How did you manage to have a red
Brett
day?
Kavanaugh
Well, that's a pretty
raising
fucking
the concern
stupid
here
question.
in this dissent that the court's decision could generate uncertainty regarding various trade agreements. That process, too, has been difficult. And that echoes, guys, the point that the President of the United States has made several times, which is the IEEPA unilateral tariff authority that he was claiming gave him enormous leverage to get other countries to the negotiating table and cut deals that benefited American taxpayers. Now that leverage is gone, and you wonder how many countries are going to try to come up with an alternative to deals that they've already cut,
global
or to get
politicking
out
that's
of
going to be going on
finalizing
now.
deals that have been announced but not yet papered and signed. So a lot of foreign policy implications here, a lot of trade implications, and of course the political ramifications will be enormous, guys.
I mean,
yeah, sorry,
I was just going to say, ultimately, I think it gets to, you know, the having the president
I guess
have
it was a good
executive
exit.
flexibility
This is getting painful.
in foreign affairs. Right? Is that
Right.
that's ultimately what's at stake here for this administration?
Trump
and what
SCOTUS ruling a disgrace.
That's exactly what the administration argues, and what the Supreme Court here is saying. You know, that flexibility is not in the Constitution. So unless Congress legislates it, you don't have it.
Right, and has not been used by any other president.
True.
Right.
At least as a tool in terms of those relations. Eamon, thank you. We'll be obviously getting back to Eamon Javers throughout the hour for more. Let's get over to Dom Chu now, though. Let's get a look at some of the individual stocks that are moving as a result, perhaps, of this decision. Dom.
Sure, and to frame that discussion around kind of the certain parts of the market that have seen more relative volatility to what's been happening with
an issue here at 25,000 off of it. I mean, I have to play it a little bit tighter today. Generally, I'd give it a little bit more room of, like, maybe instead of using the recent lower high, I'd go back to the second recent lower high. The issue in this circumstance is that the ranges are gigantic. So, like, if I go back to multiple, it's just more risk that I'm willing to take. So it's still trying to be, I suppose, risk conscious, if you will. But we're going to see here.
Retailers in that. This is the Spider XR.
Wait, what the fuck just happened? How are these getting knocked already? How did I just lose? I guess it's on unrealized? Wait, how the fuck are these drawdowns computed that I lost it like that? I thought I had 5K of drawdown.
Take a look, for instance, at shares of Best Buy, also RH Williamson.
So obviously the Lucids are not,
Some of the more closely associated ones with tariffs.
but they're about to get knocked there. So I'm confused. I literally just lost the FFNs. I thought the FFNs, am I like confusing multiple types of accounts, folks? Am I wrong that FFN, basically which one is unrealized drawdown and which one is EOD? Because like I'm obviously conflating these accounts at this point.
Not so much that discount side of things, but it's up 1.5%.
So it has to be. Wait. So TPT switches it. FFN changed from EOD, so it is now unrealized. So I was right, and now they switched it. Well, that I guess I wish I paid attention to that fucking rule. TPT is unrealized.
lawmaker reaction, guys, to already from both sides of the aisle. Rand Paul, Republican.
Wow, I wish I fucking knew about that one. Okay, that's a lesson learned. That, I guess. Wait, so TPT, the evals are EOD, and then the pro accounts? Is that right? That the evals, that's kind of bullshit. The evals are end of day, but then the funded are unrealized? They switch it? Like when you go up to pro, they make it more difficult? TPT evals are EOD. Wow. I thought they were all, what the fuck? All right, well, that's a painful lesson learned, but I guess I'm not going to forget that one moving forward. Holy cow. Good. I mean, I appreciate you guys for sharing. I just legitimately did not know that. Wow.
It's also pointed out that we get this decision literally days before the State of the Union address, where he ostensibly is going to celebrate his crowning achievement, that is tariffs, in front of the very justices who just ruled against him in the front row.
Yeah, it's a good point. Although,
so these lucids are actually still fine because well, no, they're actually
what do you mean? We
under pressure, legitimate pressure.
No, I'm just saying he's never backed down on the strategy of using tariffs as a means of negotiation and leverage to get what he wants, and I don't expect him to do that.
That's a painful lesson learned, but a lesson nonetheless. And I've now lost my data feed, so that sucks.
By his administration, it's certainly a blow to his ability to do that, and maybe politically, but I mean, he's a guy that has consistently believed in tariffs from the very beginning. And
why can I not get reconnected?
Yeah, we need like some sort of master,
Wow, I feel
like
stupid for not knowing that.
All the money from Madoff,
like really
that guy.
stupid.
We need him. Figure this out.
Yeah. Right.
Beautiful mind kind of thing?
No, yeah. I mean, they managed somehow to get everybody their money back there, but it took, a long time. This is going to play out in the courts for years.
This is definitely
Again, $133 billion at stake here.
Going to be in courts for years.
From IEPA. Let's talk more about the market impact. Charlie Babrinskoy, Ariel Investments Vice Chairman, joins us. Charlie, overall markets holding in relatively well. We're seeing some relief for the retailers that have paid a lot of these tariffs. What's your reaction to how impactful this is?
I wonder.
Unabashed enthusiasm. I mean, this is a very positive development for the market.
But once again, not that much of a. It was a surprise that we actually got the ruling today. But the fact that it was ruling this way, Kalshi and Poly Market, all the bets on that were for a while.
This would be the topic that almost all economists, conservative or liberal, agree on. Tariffs are not good for the country that imposes them, for the countries that have to pay them. They are inflationary. They reduce productivity, they reduce countries focusing where they have competitive advantages. Just to size this, our economy is about $30 trillion. $300 billion, which is the incremental tariffs that we got, is about 1%. We're running about 1% hot in terms of inflation. And there puts and calls and tug of war on what's causing that, but inflation has been part of the reason, has come from tariffs. It's the reason why inflation has stayed as high as it has. If you look at companies, they were very slow to impose higher prices, but they started to as the year went on. And now they're going to be in a position where maybe prices will be a little sticky, but they certainly won't go up as much as they otherwise would have. So this is a big positive, mostly for the real economy, for companies that make things, not services, not technology. This is going to be very good for the Mattels of the world, for the people that make car parts and housing products. This is a very positive thing that I think, frankly, there's not much controversy about.
Yeah, unless, of course, the president and his advisors figure out a different avenue in which
they will.
Which to impose those
we
tariffs,
already know
Charles.
they will.
I mean, as Sarah's pointed out, it's a significant sum, but of the tariffs that have been applied, it's not all under IEPA, and one would expect that they're going to figure out plenty of ways, and have had months to consider it, of making those tariffs stick in another fashion.
Fair, but the market likes balance of power. The market doesn't like an autocratic president. I happen to be a Republican, but even I don't like an autocratic president. And so the market, directionally, this takes us
by
back
definition,
to what
the fact that the Supreme Court knocked this down, doesn't that prove that he's not autocratic?
They have to be approved by the president, but that's where
like
they're supposed
if we
to
were
emanate.
really
And this was
in an autocratic
situation.
situation.
So we are now moving in a direction. Again, the market thought this was going to happen, so you're not going to see a massive positive reaction today. But the other way, if the Supreme Court had ruled in favor of these tariffs, we would have had a bloody day today.
You think? I don't know. It feels like it was.
Yeah,
it was
that's
sort
just
of
a rant. Who the fuck is this guy?
That's what I'm saying. Sorry, this outcome was priced in, which is why we're not getting much of a move. If they had upheld these tariffs
that's fair.
and said that Trump could impose whatever he wanted under this legislation, we would have had a bloody
But
day.
why bloody?
All right,
I
so
think
this,
I
this
agree with
doesn't
the
really
bigger
change
surprise,
your view,
but
then,
why
'cause you
bloody?
clearly were in the camp that believed that the court would rule the way it did, correct?
That's
yes,
right.
everyone
That's
knew.
And your
right.
view is
But
what,
I think
Charlie,
it's still
in
positive.
terms of, overall, let's just sort of talk broadly speaking here. With this ruling now having passed, what's your overall view of where we stand right now in the S&P and the NASDAQ and everything else?
Yeah, so this, the same place I was a year ago, and that is that you've got to talk about different parts of the market, that the hard asset parts of the market, the technology world talks about software and hardware. You can do the same thing for the overall economy. Hard asset companies, housing companies, auto companies, oil and gas, consumer products, those areas never got to the 28, 29 times earnings that the S&P did. And so the technology part of the world, the soft part of the world got very expensive, and the value part of the world, the hard asset part of the world got very cheap. And we've had a big rally in our part of the world that we live in the value world over the last year, but there's still more to go. My portfolio is trading about 14 times earnings, still very reasonable. The technology world is still not attractive in the high 20s.
Interesting. So I assume your portfolio doesn't include the likes of a Caterpillar or a Walmart, both of which are trading at 45 times earnings or something along those lines, despite they might once been viewed, I would assume, as being part of what you were just describing.
You are correct. There are names in the old economy hard asset world that are too expensive. I don't own any of those. You're right. Walmart's price is mind-boggling to me. But there are lots and lots of good value names. Just look at housing supply. Look at construction products. Look at oil and gas, still trading for less than 13 times earnings.
Vols, this is just going
This, by the way,
nuts
was
today.
a very good decision today for the oil and gas industry. So that part of the market is still reasonably priced.
Charlie, just to circle back to tariffs and the court decision, I wonder, is it too much to hope that having IEEPA ruled on now, there's some incremental incentive to hire or invest, that there's marginally less trade uncertainty than before?
Yeah, thanks. I think that's right. I think we're going to see really good margins here, margin improvement. So I think prices will be sticky on the way down, but this is a significant cost that our portfolio companies were talking about how they were having to include it in their income products. And now that's not going to happen going forward. So at least we won't have growth in expenses. I think we're going to get margin improvement in a lot of the affected companies here.
All right, Charlie, thank you. Charlie Bobrinskoy from Ariel, First Reaction on the markets. Guys, I just want to raise something else, another issue to watch here, which is there a role for Congress? I'm looking at some of the statements coming in from different lawmakers. Senator Bernie Moreno, big Trump fan. He's the senior senator from Ohio. Part of his statement says this betrayal must be reversed and Republicans must get to work on a reconciliation bill to codify the tariffs that have made our country the hottest country on earth.
Thanks.
While he still has the slim majority here in the House of Representatives and the Senate, I do wonder, I think it'll be worth watching Congress to see if he can use Congress, if that's the argument of the court, that the Congress has the power to tax and tariff, if Congress can step in to help him. I'm not sure.
It is poetic that only now would Congress actually say, oh, yeah, we have a role in this.
Exactly. They were on the sidelines for most of this, and I'm not sure it's actually, I don't know if it's one of those issues where all Republicans do agree with. Typically, Republicans have, in the past, the old Republican Party hated tariffs. They were free traders.
And the margin's what, one seat at this point?
Yeah, it's pretty slim.
Somewhere in there. See if somebody.
Just something to watch.
Yeah, it is. Very interesting. Let's watch the impact on autos as well as they move on some of this decision. Phil LeBeau's got that. Hey, Phil.
I want to show you three segments of the autos and the auto suppliers that we want to look at. Let's first off look at the domestic automakers. And by this, we're talking about GM, Ford, Stellantis. We'll put Tesla in there as well, although the tariff implications for Tesla far different than what they are for the quote unquote the big three. And the reason that these stocks, they moved initially a lot more, they've kind of regulated and pulled back a little bit. Couple of things to keep in mind. First of all, there has been a tariff headwind. As we've reported their quarterly results, they have said, look, it's maybe $500 million or $1 billion or $2 billion is what the tariff headwind will be. Still unclear how much of that will go away because of this decision. I should point out that AlixPartners has run the numbers in terms of what the tariff implications are expected to be in 2026. And for domestic auto production, it's going to be about $15 billion net cost. That's after all of the rebates for goods that are U.S. content, et cetera. It's about $15 billion, another $15 billion for those vehicles built outside the United States brought into the U.S. We know that some of that is offset because of those offsets that we mentioned, but also the companies will have to eat it, as well as some is passed along to the consumer. Bottom line is this. I think what Charlie Barbinsko has just said regarding margins, I think that's true. You're going to see the auto sector being one area where that's a definite impact. In terms of the foreign automakers, talking about Toyota, Nissan, Honda, Mercedes-Benz, BMW, the implication is a little less clear because, remember, there have been some final trade agreements, as Sarah pointed out, that have been worked out with these countries. Are those still in effect? Are they not unchanged? If that's the case, this decision doesn't have a whole lot of implication there. And then finally, take a look at the auto parts suppliers. Now, these guys are probably the ones who are going to see the biggest impact here. But the movement in the stocks is not a lot because they're waiting to find out what happens with USMCA. That is far more important to the auto parts suppliers than it is to anybody else. And we know that agreement comes up later this year. How is that worked out? And what is the implication there in terms of production in Canada and in Mexico?
The IB high
that's a snapshot of where we are in terms of what this decision means for the auto industry.
Phil, thank you. Phil LeBeau, of course, as we take a look at some of the auto suppliers there. Let's bring in Apollo's chief economist, Torsten Slok, who joins us here at Post 9. All right, let's just start off on, obviously, the news of the day. What are your thoughts about this ruling from the Supreme Court?
Key implication is that the inflation forecast is now going to go down, and this makes it a lot easier for the Fed to cut rates. It actually has made Kevin Warren's job a lot easier than if you had the problems of inflation still being a headwind over the next several quarters.
But
and when inflation is coming down,
inflation.
that of course also means that therefore it becomes easier for the committee to say, well, if the rest of the economy, especially the labor market, is still doing well
1%.
and inflation is lower, that means that the Fed implications and the rates implications are very clear.
How much inflationary impact did you attribute to tariffs?
We're
so
literally
we can
at
try and understand
0.94.
perhaps what it may come down if in fact it does.
Yeah, we estimate that roughly
crazy
half
pills.
a percentage point of the rise that we got in inflation last year came because of tariffs. And if we now have that roughly 2/3 of tariffs that have been collected came under IEEPA, that means that in very round numbers, around 0.3% should be the decline in inflation over the next several quarters.
That's not in the data. I mean, it's not in the PCA data today that we got. If you look at, okay, let's look at all the tariffs. I know, look, okay, clothing and footwear, negative 2.4% price impact. Durable goods, negative 1%. Furnishings and durable, these are all the tariff items. They were negative, down
1%. It's 1%. You're trusting the government data?
The 3%
that makes no
inflation
sense.
number came from, which was hot.
You're trusting the government to tell you
services,
the honest
financial
truth
services,
about inflation.
other services, housing, which is services. It's not in the goods.
Yeah, so this is just 1 month number, but if you look at it for last year, those components saw much higher inflation rates.
That's
but you're
crazy.
right, going forward, the service sector should also begin to see some easing of the inflation pressure.
Believing the
something that we have talked
government
about
on
now for a while.
I have a bridge to sell you.
3.0% today is indeed quite worrying on its own, but we should still expect now that inflation is going to be lower.
But why?
Because of tariffs coming down.
If tariffs are not contributing to inflation now,
But they did contribute last year, so the year-over-year window will mean that as you go through this year, will mean that
but
you
we
will
were
begin to
already
see
lapping those.
This guy's
we were already
100% wrong. I'm happy she's clapping
To our earlier
back.
point, not every
She's
tariff
right.
has been
He's wrong
implemented
on
in the
this.
price.
This guy's a jerk.
So there were certainly also estimates saying that there was something in the pipeline, but now that this is not going to be implemented, that of course also will be
look at
arguing
these
for why inflation
ranges.
should be lower.
26.
You're willing to go that far even
we're
with
going
oil
50
at a 7-month
points like
high?
it's nothing.
Well, of course, there's a lot of other components going on at the moment, but it's clear, of course, the geopolitical risk, in particular oil prices, which didn't do much over the last several months and geopolitical episodes, if that were now to become a bigger factor, certainly that would, at least on the food and energy part, be lifting some more upward pressure on
But
inflation.
the administration said they have a plan B, and they're going to just do all these tariffs under different
They will.
authorities.
They're just going to use different acts,
will now
different
come
authorities.
with much more investigations, much more time lag, and therefore there will be much more delayed relative to how it's been used and deployed over the last 12 months.
This guy is comically wrong.
Expect an economic impact.
Who is
I
it?
absolutely expect that inflation will be lower as a result of this.
And
it's already dirt low.
Makes Kevin Warsh's job easier. So you believe what? When do we start to see the impact in terms of lower rates from the Fed?
Well, the market has been expecting 3 cuts this year. The Fed themselves are only expecting 1 cut. So I do think that when we get to the middle of this year, we should begin to see, at least on the inflation front, that it becomes a lot easier for the rest of the committee to say, well, the inflation problem we worried about for so long is no longer as big as the worries we had just even at the last meeting.
What about the job market worries?
Well, the key worry on the job market has been that labor supply has been declining a lot. So in 2022, 23, and 24, net immigration into the U.S. was about 3 million people.
This whole thing is a nightmare.
And the CBO estimates that so far in the last 2 years, meaning 2025 and 26, it's dropped to only 500,000. So that means that the main reason why the labor market has been slowing is not because of weaker labor demand. It really has everything to do with weaker labor supply.
Right, and which there was a good study we highlighted yesterday out of San Francisco Fed showing it was basically 1 for 1, immigration to job growth. So
almost got myself out of the hole.
GDP has been relatively strong. GDP today
so
was
I would have been fine overall. I thought they were all EOD. I didn't realize that TPT switches. That's kind of bullshit. I'm a little pissed off about that. Obviously, I'm most angry at myself. I didn't realize you could switch eval to fund the drawdown type.
Entirely driven by labor supply.
I would have stopped at a 2K profit.
And in the broader economy.
Is the break even negative now?
Well, the Dallas Fed says that the break-even is about 30,000, but you can certainly come to, if you in particular have your migration being very weak in certain months, that it could be closer to 0, and in some months it might even be negative, mainly because of the demographics that are weighing from an aging population on holding job growth down. Right. But you're right, Carl, this becomes very important because the latest job numbers were actually not bad at all, in particular compared with estimates of break-even of around 30, 50,000.
Right. Do you think it's possible we don't add jobs this year?
Well, the discussion that we've had about we didn't add any jobs last year, that's not because the economy was bad. That's because immigration was weak.
Yeah, minimal job growth last year. I'm wondering, could it be worse this year?
No, you're right. And therefore, if we have the same immigration policy, which we have all reasons to believe, then we should absolutely believe also that job growth is also, from that perspective, going to be low. But it is simply not so much because of the economy slowing down. It is much more driven by the fact that we have much fewer immigrants coming in.
All right. Torsten, you want to stay there? I think we want to get back to Eamon Javers
I think
in
this guy
D.C. Eamon.
is a little...
Yeah, David, our Emily Wilkins has got a statement now from Senator Chuck Schumer's office reacting to this. Of course, the Democratic leader in the Senate saying this is a win for the wallets of every American consumer. Trump's chaotic and illegal tariff tax made life more expensive and our economy more unstable. Families paid more, small businesses and farmers got squeezed, markets swung wildly. We've said from day one, a president cannot ignore Congress and unilaterally slap tariffs on Americans. That overreach failed. One political note here to weigh in on this, guys, as you look at this 6-3 decision, striking to me that 2 of the justices that President Trump appointed to the Supreme Court sided against him.
Yeah,
Gorsuch
there's no
and
way
Barrett,
he could be stoked
both
about
decided, sided with the majority
2
here
of
on
his
that
own
6
selections voted
to
against
strike
him.
down the president's dearest domestic and international policy objectives. So that is a striking thing. And one of the reasons why presidents are often frustrated with Supreme Court justices is they have lifetime tenures and they can do what they want once they're placed on the court. One other thing I think we should really focus on, which we haven't had a chance to do yet this hour, is China. This ruling, we're looking through all the tariffs that the president imposed so far this year on China. This ruling will strike down all of them.
25.
You remember there was this tariff truce between the United States and China, President Trump and Xi Jinping back in October, where they lowered tariff rates. But all of the tariffs now that the president has imposed on tariffs in this second term, that the president has imposed on China in this second term, have been under this IEEPA authority. So all of those tariffs are now struck down. So in terms of the trade between the 2 biggest economies on planet Earth, China and the United States, this will have an enormous effect on that unless the White House can come up with some other authorities relatively quickly.
Which they will.
To impose tariffs on trade with China.
And then whether they're legal or illegal,
there's going to be an open door in
that.
terms of tariffs between China and the United States. And that is the absolute cornerstone of the president's trade agenda, guys. So I thought it's worth focusing on.
On a day where we get his travel dates to China, Eamon. Right. He'll be there March 31st to April 2nd. Meantime, some items on the wire from the likes of, say, the British Chamber of Commerce trade arm, which argues that this is actually going to introduce more trade uncertainty.
Absolutely it will. Because one of the things you have to bear in mind is a lot of these trade agreements with other countries where the president used that leverage of tariffs to get them to the table in the first place and they announced a deal, a lot of those have not actually been ratified by the parliaments back at home. So they don't have force of law right now. So if you're a foreign country that was forced to the table by this threat of tariffs and you haven't ratified your agreement yet, you might look at this decision and say, well, wait a second.
The high from
There's no
two
reason
trading
for us to
sessions
ratify right now because the president can't hold this over our heads anymore. That's the leverage that the president was so frustrated about going away. It has gone away, and now we'll watch as other countries that have not formally signed or finalized those trade agreements, and there's a lot of them. I don't know the exact tally right in front of me. A lot of them have not been ratified yet by home country parliaments. I would imagine those countries will start to slowly walk backwards away from those deals.
South Korea is a big one.
South Korea, of course, comes to mind, given the president has already called them out for their failure to ratify and how quick or slowly things have been moving.
Well, they knew the longer they took, the more likely this decision could help.
Yeah, a lot of people were treading water waiting for this.
Although I asked Jamil Jaffer about this, and he said that actually he didn't expect much. We were just talking to him, expect much change because these are. Yes, they were negotiated around the threat of IEEPA, but ultimately they were deals negotiated. So there's no reason ultimately that these foreign governments should go back on them because, the White House Commerce Secretary, Treasury Secretary, they negotiated these separately, these deals.
Yeah. But the terms of the deal have changed, right? I mean, the terms of the political reality have changed. And you can imagine the temptation anyway in foreign capitals to look at this and suddenly discover a codicil or a paragraph or a subsection that you really object to. And, we're just not going to be able to sign this thing after all.
Yeah, interesting. Also, just watching some in terms of the market reaction, guys, the dollar index actually initially kind of jumped on it and now has turned lower. And maybe Torsten's Lock, it's because of what you say, which is, well, it'll be easier to get easier policy now if you don't have to worry about tariffs.
Because the expectation is if rates are going to come down, then there's less money, of course, coming into dollars. But at the same time, another key issue here is also that if the government needs to go out and find 133 billion, if we now see more treasury issuance, the curve could potentially also see some reaction. But that's why what's coming next in terms of the reimbursements will become very important.
But they want to use
you mean steepening?
Absolutely, because then they need to go out and find 133 billion on the curve, and if that happens further out, of course, then we should be a steeper curve.
They'll just use another section from another tariff bill.
But that will take some time, obviously, to begin to implement.
Sure, but ultimately, the bond market hasn't really, we were watching the bond market carefully, we haven't really seen a big sign that there's all of a sudden worry about the debt or anything like that.
No, because on the one hand, inflation is going to be lower, which argues for lower rates. But on the other hand, the economy is now going to be hotter. And the economy is already hot because of the One Big Beautiful Bill. We have AI spending, and those tailwinds will continue to accelerate over the next several quarters.
I was off by 2 points.
I've seen conflicting numbers from IRS and B of A on where refunds are tracking. How are we up year on year, and do we think that money's going to get spent on utility bills or saved with the saving rate as low as it is today?
Well, the key issue is that the refunds will, broadly speaking, be roughly $1,000 bigger when we come to tax filing season. Normally, households get $3,000 in tax filing seasons, meaning in March and April. This time around, they will likely get around $4,000. That's a very, very meaningful increase in consumer spending because there's about 120 million households in the U.S. If you give them $1,000 extra more, that is a very meaningful boost in March, April, and May to consumer spending over the coming months. So on the back of this decision, it really is moving more towards a Goldilocks scenario where growth is going to get better and at the same time, inflation is going to be lower.
I still don't understand why you think services inflation comes down as a result of this.
Well, I've been arguing with you for a long time.
I know, but you're expecting all this great growth and GDP growth.
But I think last year...
That's what's fueling services inflation.
No, you're right. But last year, most of the growth in inflation came from goods. Now that's been coming down a bit, but service inflation, it begins to get hotter. And that's because the labor market is hotter because immigration is now running much lower and therefore creating more wage inflation. So the conclusion is, yes, you're right in total. There's a lot of moving parts, goods and services for inflation, but the net effect of this must be in the Fed's forecast that inflation is going to be lower.
What about productivity improvements, given everything we're talking about in AI that's still mostly on the come, but could start to hit this year?
Yeah, that's true. We haven't seen that yet. As Jay Powell has said repeatedly, we're not seeing it in inflation, we're not seeing it in productivity, we're not seeing it in unemployment. So yes, it is likely that we'll begin to see some of that, but those, of course, are very uncertain factors at this point. But those are also key issues for the inflation forecast if they were to play out.
I feel like he doesn't know what he's talking about.
Job forecast over time as well, as we've discussed many times in terms of the dislocation.
I just disagree with him on where inflation's at.
What about consumer spending? Do you think there will actually be a change in consumer spending and confidence as a result of this decision?
Well, if the importers now go out and say, well, suddenly we don't have to pay tariffs at these magnitudes.
All right, this guy's making me mad, and I was hoping to lock this trade in and then do the Payday Friday. It's just taking forever. I really thought I was going to lock in here at 10:54. Got crazy close at 10:55. but it is not. So I don't know. I keep moving my stop up. Unfortunately, I lost 2 take profit accounts and 5 FFN accounts because I thought they were like Lucid, the end of day drawdown. They are not. So I lost those, and it's kind of proof that if I was trading it right, they would already be back to break even because like literally I was doing the exact same trade. So that's on me. It's my fault for not knowing it. I'm just more surprised on take profit that it switches from end of day on the evals to unrealized on the funded ones, which I guess whatever. You learn the lesson and you move forward. I just was very, very surprised. So it would have changed my strategy in the way that on unrealized, instead of doing trend following and going for it, I find that it's better to have your first couple days just going for measure targets. Get 1K, or whatever your measure target is. But like, get your money, lock it in, and shut it down for the day. It does change how I do it when I'm initially building the buffer. Just a generically, like, it's a separate tactic, I suppose. So good to know. But like, for example, if I don't necessarily have to do that on Lucid. On Lucid, if I have a runner, I could let it go, and if it starts to pull back, I'll get out. Now something like FFN, I need to go for those measured targets and not let it draw back that much, and apparently that's true with the take profit funded. So I guess lesson learned, and like I know how to handle those situations. Like I've come up with the trading strategies that I feel give me good odds for it. You just have to know what type of account you're dealing with. So it's on me. It's 100% my fault. It's stupid that I didn't check it out. Why I'm targeting this level? What's about to get a fill, or it should have. Dude, Jesus, no way. I was off by half a point. No way is that going to reject me there.
That really impacts Apple. Remember, guys, last year we saw Apple sort of shift its entire supply chain, moving
No.
in order to get around the worst of these tariffs. They kind of painted this picture of everything we make in Vietnam.
No.
MacBooks and Apple Watches and other accessories will eventually go.
Are
over to the
you
United
fucking
States. And
kidding?
as far as the iPhone, they're shifting as much production to India
One
as
tick
they could. So
away.
this actually gives them a little more breathing room to keep that production in China, which is where the bulk of their production actually happens. And
All
to
right,
start
I know
selling
what's going to
some of those
pump this
products
market
back
up.
into the United States without this
I know how to do a little bit of a pump here. This inevitably always helps you hit your profit target. Little pump song. I cannot believe that.
Born in 1964, Jeffrey Bezos, CEO, entrepreneur, born in 1964, Jeffrey Bezos. Come on, Jeffrey, you can do it. Pave the way, put your back into it. Tell us why, show us how. Look at where you came from, look at you now. Zuckerberg and Gates and Buffett, amateurs can fucking suck it. Fuck their wives, drink their blood. Come on, Jeff, get 'em!
If that doesn't pump the market to my profit target, I don't know what will. I don't know what in the world would possibly at this point save it. I'm running out of tricks here. I'm doing all the market manipulation I possibly feasibly can do, and it's coming up dry. It's coming up dry at the moment. I mean, it helped. It at least stopped the sell-off, but I need something.
Order
there
filled.
we go. All right, let's pull that order.
Canceled.
Let's pull the orders. It worked. It was just a little delayed. It worked. It was
Order
just
canceled.
Wow.
Order canceled.
Random. Okay, so we locked in. I got back green on Lucids, which are end of day drawdown, and then I got to the 3.3 on the FFN evals, which these are unrealized. So that's good that I got to that level. Like I said, it's all just on me. It's all on me. So it's frustration at myself, not paying attention to the rules. But like I said, with the EOD drawdown, those are the ones that you can like actually give it a shot to run. The ones that don't, you need to first focus on building on your buffer. And for me, I like to do 1K days. Lock in $1,000, move on. Lock in $1,000. And I guess that's on the 50K account. So maybe on a 150K account, you could double it up to like 2K. But I don't like to do at first, as I'm building out the buffer, I don't like to do hardcore trend following. I like to do trend following to a point and cap myself just so there's not that big of a differential. So just want to put that out there that I would have tactically handled this, at least on the TPT accounts. I would have handled it separately, but hey, lesson learned. And I'm happy that FFN, I pretty much got them back the new evals where I needed them to. And on the Lucids, I did save them. They were down 3 on the ropes. But once again, like you saw my risk management, I streamed all the trades to you, just trying to take a stab at it, going fishing, getting my stop to break even. And then eventually you just catch a runner. It doesn't always work. Actually, you like literally witnessed a lot of the, I suppose, hang on. Oh, fuck. I don't have my profit target in. Brother, oh 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 brother. I forgot that I did a premium selling trade that I need to get in there. All right, that trade is in there. Orders working good. I did post it into the Discord because I know Piper fired and all that craziness. Piper did fire. That's in there. My trade's in there. Okay. We're cooking. We're cooking with potatoes. We're cooking with potatoes. All right. We don't need that guy anymore. Sam BC was messing all sorts of things up. We are getting that nice grindy follow through. That is way too zoomed in. All right. So we're about to do the giveaway, just so everyone knows. If you haven't already, like, retweet, and follow on Twitter. It is free for everyone. Like, retweet, and follow. We're giving away 5 accounts from FFN, sim to funded futures trading. We're giving away 5 accounts on Vanquish, sim to funded options trading. So we're giving away 10 accounts, 5 and 5. We're giving away some on Twitter. We're giving some away in the Goonie Trading Discord. If you want to be in the Goonie Trading Discord, sign up today, goonietrading.com. If you want to know if it's worth it, ask members in there. Hopefully they'll tell you the truth of their opinions on it. Obviously, I think it's good to be in there, but definitely check that out. And then so hang on, I need to check out some of these levels. There's this one. There's this one. Okay. All right, we're throwing that order in there. So we're going to be rocking that. This trade got blown out. Thanks a lot, guys. Just so you know, on Apex, they're running a gigantic 90% off deal with that code Goonie. You could take advantage of it. Lucid's running a pretty good deal on your first 2 evals, code Goonie. 50% off any eval, limit 2 per trader. So check that out. Same thing, code Goonie. Right now, just before we get into it, we are getting a little bit into positive gamma here. You can see a chunk of positive gamma at 6,900. Another chunk up here at 6,925. Which obviously I did have those levels, 6,900. That's kind of where we spiked on this craziness. And then next one, 6,925 if we hold this. So big watch for me. We did take out that low from 2 trading days ago. I suppose at this point, if it keeps going, we might be talking about 25,400. I'm looking at all these next levels of resistance. So as a swing trader, you might want to be looking at roughly, I don't know, the high that we saw in like early February in here. If you're like trading on NQ, I do like this 25,400 range. We're back above 900. We're trying to get on the north side of the cloud. Piper did fire bullish. I took some bullish trades. As of this moment, I'm good on the FFN, so I don't need to trade those anymore. And in terms of the Lucids, I guess I could theoretically keep trading the Lucids. I'm kind of happy I just got them back to green after, I don't know, all those debacles that I had, but that's the bounce off of 100. What time is it? It's 11:06. That's not the most risk.
Order
all right.
submitted.
I'm just going to be better about my risk now. All right, there's that. 23. All right, I'll just leave that up there. And if it hits, it hits. If it knocks back, I don't want to be too aggressive, like multiple contracts aggressive, because it might retest. You have the initial balance, and roughly on SPX, like we're at that 6,900 level. So you never know what the reaction is going to be, which is why I'm keeping my risk pretty tight here. I'm happy I got out of that hole. I was in the hole of what, like 3.5 3.6K. So the fact that I'm roughly break even is where I'm happy, and I'm risking just below 100. Feels like it's coming for me right now, which is a bit of a bummer. But maybe it'll bounce, but whatever. Keep your risk in control. I'm sizing down. I feel like things got a little bit out of hand, but hey, that's the life of a degen trader. Sometimes your risk just gets a little bit out of hand. All right. So with that being said, you still have a couple minutes. All you have to do is like, retweet, and follow. The Twitter account is Matt at Matt_Kohrs. I'll also drop the link if you just need to click on it. My mod's been putting it in chat, and so is Nightbot. But if you need help finding the link, wait, Steel Toe Morning Show has rated the stream. Shout out, dude. That's nice. Shout out. Anyway, I put the link in there for the giveaway. If you are in the Discord, let's see how I can do this. / giveaway, duration 3 mins, winners 7, prize racer. All right, if you are in the Discord, go. You can enter right now. So if you're in the Goonie Trading Discord, all you have to do is enter the giveaway. You have 3 minutes. So we're running that. And in the meantime, while we are running that, we're going to get the 3 people off of here. Twitter picker. All right. I need to get this link. Just want to do it all in front of you so I don't get accused of any nefarious actions. So here's the tweet. Like and retweet. 3 must follow at Matt_Kohrs. And then any 0. Okay, so basically this includes everyone. All right, so wait, I need 3. Okay, so that's the tweet. Like and retweet. There's 3 of them. Follow me. It could be any account. All right, pick a winner. We are going. So these are the first 3 of the 10 racers, and all 3 of these members will be getting an account. Mac, Johnny, and So Volatile, you are already a winner. So we have Rocky, we have Bees, as in Bees Knees, and So Volatile. Looks like we have a BMW right there. So congratulations, you guys are already in. So that is 3 of the 10. The other ones, this is running right now. Looks like we still have 1 minute left. So if you're in the Discord right there, you have 1 minute. All you have to do is enter. There are going to be 7 winners. Odds are looking pretty freaking good for you. And while we are running that, let me get the marble game up and running. Games, view games, library, marbles on stream. All right, we got it. We're booting up the old game. And my stop's about to get hit elsewhere. All right. I'm about to get stopped out on that long, but hey, it happens.
Order filled.
Yep, stopped out. Okay, so now it's back to being flat. Just trying to take the continuation, and it did not happen, at least as of now. All right, race, random. We are doing farewell, memorable, heaven. And there's going to be 10 of you. 10. And then we have to have this. Add names. All right, let's get all 10 ready. Let's get our competitors up there. Let's see who the competitors are. All right, so who got selected? How much longer do we have? 15 seconds. 15 seconds. So I guess the first ones. So we have Rocky, Bees, and So Volatile. So Rocky, Bees, and So Volatile. All right, so those are our first 3 competitors. All right, and then right here, let me take we have King, Cyber, Muskie, Binford, Fuzzy, almost winning, and MUF. I don't even know what this name is, but hey, congrats. All right, so let me get those names. Let me drag this off screen just so I could type them in a little bit faster. So we have King. We have Muskie. We have Cyber Scott, Binford, Fuzzy. We have almost winning, and whatever the hell this name is, but you guys are in. Finish. All right, we have our competitors. That is good. What the hell just happened over here? Dude, the fake out. Brutal. Order
submitted.
All right, I'm being a little bit of a degen, but maybe I could get a little bit lucky. All right, 19. So we're going to do... All right, the degen in me is not... It's not paying dividends, apparently. As I was here preaching risk, doing something a little silly. But what was that high? 38. So let's go to 35 on this one. All right, so we're undershooting the intraday high, and then we just have a random reach target. Trying to play with the trend, hoping that this IB bounce is an actual bounce and the risk is that low. I do wish it was below 82. Do I want to give myself that room? How bad of a hit would this be if it gets hit? It would actually suck. All right, whatever. We're going to see the luck of it. We're at that point on a Friday show where sometimes you just need to rip it. All right, let's get this ready. Alrighty. I did already somehow manage to lose my Discord, which is where I had some of that music ready to rock. We obviously have to get the Payday Friday music. And folks, while I'm getting that one ready, while I'm getting the Payday Friday music, please cast your vote for who you think is going to win. This is not an easy track. We've been on it before. Farewell, memorable heaven. Little snowy, little slippery. There's a lot going on. Obviously, we're going to get some good tunes going from Tendies and Tunes. There's our memorable heaven. You have... Oh, okay. I was going to say that doesn't look like 10 racers, but some of them were beneath us. So, okay, we do have all 10. And if you had to vote, if you had to put your money on the line right now for who the winner is going to be, who would you guys be throwing it down on? Who would you be betting your money on at this moment in time? If you had to. Fuzzy loses I Riot. MUF. Good luck, players. MUF, almost winning. Rocky, Muskie. All right. We got some cheerleaders in chat. I can appreciate the vibes. All right. Well, let's get some of this music popping off. Actually, let's play today's song. Today's song kind of slapped. Here we go. All right. We're going in 3, 2, 1. We are off. And I'm already looking backwards. Maybe, have we not done this map? This actually might be new. All right, almost winning King, Bees, and So Volatile leading the pack, and they are already gliding. Very angelic, if you ask me. They are ripping. All right, King and Always almost winning, and Bees. What a map we have going on here today, folks. What are these? Oh! All right, they slow you down. King making his way through without an issue. Wow, just dodging. King. All right, wait. Bees somehow died. I don't know what happened to Bees, but we've already... And almost winning also died. People, you know, for being called heaven, this is kind of a brutal map. King, what are we doing, King? All right, very white map. Kind of hard to see everything. King, what are we doing? King and So Volatile leading the race, followed by Cyber, distant third. All right, seeing some gold plating. King has been holding on to this lead pretty nicely. Pump these tunes a little more. King, all right. What do we have going on? Oh, almost went off the map. Rocky and making a move. What is this? What is this golden dome? Imagine if you were in this, I'd be vomiting already. Does anyone know how to get out of this? Does anyone even know how to look into it? What is happening in here? King getting the drop. I don't know how King has been this dominant on the map. I'm having a tough time following it as your favorite broadcaster, but it's impressive. MUF. You got a big cheering squad. Will Will his supporters bring him to the finish line? That's the real question here. King is leading MUF, and Fuzzy's there. Fuzzy's in third. Fuzzy, can you get it in gear? Cyber is also competing. All right. There's still time here. There's a lot of obstacles. It feels like the top 5 have a legitimate shot still. King is leading the race and has been leading it for about 90% of the time. King, all right. Whoa! King dropped all the way through a hole. Like, literally, this Swiss cheese of a situation dropped right in. Wow. That's a performance right there. Good for King. Cyber getting second, MUF getting third, Fuzzy going for fifth, Sovi getting 4, Rocky still out there, Binford and Muskie trying to make the drop. Almost winning, and B's not surviving. Rocky getting 6th, and then you have Muskie trying to drop, Muskie getting 7th, and then Binford still competing. That you gotta appreciate that. That's the heart of a competitor right there. Ladies and gentlemen, please join me in a round of applause for King. That's a solid performance right there. It really is. Obviously, for all of you who were racing, you already won something. I'll be reaching out to you, and you, King, especially, I'll be reaching out to you to get you that extra cash because your bar tab is on me this weekend. Wow, the market took a hit in that. That's a bit of a bummer, but I suppose, hey, it happens. Well, folks, what a day it's been. What a day it's been. Craziness in terms of data reports, Supreme Court decision ruling against Trump, market at first reacting pretty well. SPX did shoot above 6,900. I'm looking forward to actually recapture it there. I'll take a trade. I'll take that trade if we start to set up once again. I'm going to be waiting, though, patient. I'm already over trading on the day. FFNs, I got them to where I need them to be. Lucids, I was being stupid, but maybe if I'm smart, I can recover and do exactly what I need to. Overall, I would argue the bulls are in control in the short term. Oh, wow. What happened there? Wow, look at all that put buying. Now, they might have been buying to open, might have been buying to sell. We don't know. All I can tell you is there was a lot of put buying right there. Kind of starting at 1104. And you know what probably happened? 1104. It started right on this overshoot of 6,900. People were probably just playing the technical level, the psychological level rejection, if I had to guess. Now, are they going to follow through? Your guess is as good as mine, but I am seeing a clear hit to the delta. SPX basically at 1054 was at the intraday high, and at 1120 is at the intraday low. NASDAQ is holding on a bit better. Mag 7 is holding on decently as well. Popped to 1104, now chilling. But I would definitely say that intraday, the bulls are a bit more in control. And I wouldn't be concerned about this pullback until we break the 1030 low. I would say, oh, that's weird. But I wouldn't really be too concerned until we break the 1015 low. So 1030 low, 1015 low. I'd be watching vol. Silver's kind of chilling, but this might just be a higher low pullback. Obviously, time will tell. Specialty shout out to FFN, code Goonie, 50% off. Buy one, get one, no activation fee. On Vanquish, code Goonie will get you 50% off. Remember, a Vanquish is going to be for options, while FFN is going to be for futures. With that being said, right now, they were not partners of today's show, but Apex and on top of that, Lucid are both running pretty decent deals. And depending on how my Lucid trading goes, I might have to take advantage of that myself. But folks, it's been a crazy Friday. It feels like there's still going to be moves in this afternoon, so I myself will be paying attention. I'm going to be hanging out. Oops. Where's the main one? Sorry about that. I'm going to be paying attention for sure. I'm going to be going and trading in the Discord, paying attention to maybe, just maybe, we can spot some low risk, high quality entries. So I'll be hanging out there. Remember, if you want to trade with me, GooneyTrading.com. You can find it in the description of the video. My mod will drop it in chat. But that's what I have for you. Thank you for another awesome week. Happy Friday, TGIF. It's an OPEX Friday. It's a data Friday. It's a Supreme Court decision Friday. It was a nice pop-in Friday. Here's a pullback. What I'm looking for is this pullback to be a higher low, someplace I could get along and ride it for the rest of the day. That's what I'm personally looking for. Will it happen? I don't know. I'll tell you better at 4 p.m. But I just wanted to give you guys a quick analysis before we head into the weekend. We're going to be posting videos later on today, extra content also this weekend. And then we're going to be streaming once again Monday morning, bright and early. So have your notifications on Rumble, on YouTube, wherever you're watching this. I think there's like 2 people watching on Facebook. So shout out to the Facebook viewers. But anyway, put on your notifications. Content coming out today, all weekend, streaming once again Monday morning. I hope you crush it today. There are large ranges, size down. You don't need to be the hero with monster size today because the ranges are big enough that if you're in the right direction, you're making good money anyway. Any hoozles, that's what I have for you. I appreciate all the good vibes. I'll catch you in the next one. Peace.